been made to feel that everything we do, we have to win. But this event is also about learning, about networking, and about seeing what else happens out there. Some of the judges here are leaders in their fields. We have leaders in research, leaders in investments, leaders in financial reporting. This is an opportunity for you to interact with them. It is not every day that you wake up and you are able to sit in the same room with one of the financial reporters, for example, at IFC. So don't take this opportunity to just win or mourn when you lose, but use the opportunity to network. You have the cooperative bank also in the room. So I just want to have that out of the way so that you know the real intention is not to win that prize. The real intention is to learn and to network. So I'll jump into it, and we are behind time. A bit of also some housekeeping. So I assume all of you have had your tea or chocolate or whatever you normally have. And I'll be walking you through the rules. We'll have the first session of team presentations for around 2 hours. We are 30 minutes late, but we'll try to accelerate that. Then we'll have a tea break. As you've been told by Joyce, we need to be careful not to come in here when you've not presented. Then we'll have the second round of presentations. And then we'll top that one up with the announcements. And of course, at the end, we'll have thank you remarks from our subject company, which is a cooperative bank. And while you're talking about the subject company, I'd like to pass my gratitude to the cooperative bank. And here they're represented by Veronica, who's the head of investor relations and strategy, and Ben. Want to say thank you for continuously offering your firm to be reviewed, and also working with the CFA Society in this journey. It is something we appreciate, and we understand it requires a whole lot of time. Like we all know, volunteer means most of the time there's nothing you're getting back in return, but more of giving. So thank you so much, the Cooperative Bank. I'd also like to thank our judges. Francis Nasiomba, yours truly, standing here. So thank me too. I'd like to thank Richard Muridi, who's been a very good supporter and volunteer in the society. Richard is a senior portfolio manager with the ICA Lion Asset Management. So to the first point I mentioned, you need to be reading through this. I'd also like to thank Ephantus Maina. Ephantus is a senior research analyst at Kestrel Capital. Brenda Muchomba. Brenda is a senior financial reporting accountant at the IFC. And Maina Washieni, who is in asset management. So I'd like to pause here to request you to clap for them because you need them to be happy. Thank you. So there are some rules, and I'll try to move quickly, and hopefully you will not forget them. We have a number of teams, and I digress, but we had 15 teams. We'll show how they've been graded. You are not allowed to disclose your university name. I know we are very proud of our universities and our alumni. You will talk about that when you win, or when you win at the end. So you're not supposed to mention your university name. You'll be given a letter. I think it has already been assigned to you. That is the only thing that you need to mention. You may not use props, so we do not expect buckets of water to demonstrate anything. So you're not supposed to use any props, just your presentation. Only student team members may participate in this presentation. I hope you know that. And each team presentation is limited to 10 minutes. The judges can choose to add another 5 minutes for questions and answer, but your presentation is limited to 10 minutes. You'll have a timekeeper who will keep showing you the time remaining. And at the 1 minute warning, you'll be told aloud. Then when it gets to 10 minutes, you need to stop. Of course, we encourage you to make sure each of the team members participates. Okay? So the structure in the Kenya finals is we have 12 teams. We had 15 teams, and 2 teams did not fulfill the first round of grading, providing their reports in time. One team has unfortunately been disqualified because of plagiarism. As you know, CFA Society, the key driver is ethics. We can all make money, but if we are not ethical, then we risk our future. So one of the teams, because of plagiarism, has been disqualified. The 12 teams will be graded based on the graded reports, which you've already handed in, and it has already been graded. I know you don't know the results yet. And this presentation. So this presentation constitutes 50% of how you'll be able to perform. Then there'll be a second round where the top 2 teams will perform. The judges may choose if they want to add or reduce those number of teams, but there'll be 2 teams. And then the winner will be determined based on that final presentation, constituting 50%, 100% of their performance. So that final winner will be the Kenya Finals winner. The presentation scoring, they are, if I'm not wrong, 7 levels of scoring, and they'll add up to a total of 100. So 1, your financial analysis will constitute 20 marks. Valuation, the methodologies, how appropriately did you use them and how detailed are they, will constitute another 20. Environmental, social, and governance, the famous ESG, will contribute 10% of that. And this is how did you incorporate that, conservation of the natural world, consideration of people and relationships, and standards of running a company, governance and all, will be 10%. Presentation, how do you present yourself? How do you carry yourself? How confident are you? How do you involve your other team members in presenting? Will constitute 20%. Questions and answers. There will be questions that will be coming mostly maybe from the judges, sometimes even from the audience, and that will also constitute 20%. And of course, I've mentioned team involvement. Sorry for my repetition there. And finally, materials. What's the quality of your slides? I always find this very interesting. Most of us get, what we get. So there's been a change in terms of how you proceed from here. So how the CFA Society has classified the regions in the world, there are 3 major regions: Asia Pacific, Americas, and what we call EMEA, Europe, Middle East, and Africa. And in the EMEA region is where we sit, under the Sub-Saharan Africa sub-region. We have the Eastern Europe, Northern Europe, Southern, Western, and we also have the Middle East and North Africa. We are seated in Sub-Saharan Africa. So once the winners from the local competition this year will proceed, will advance to the sub-regional competition, and that will be determined using the UN and the CFA Institute definitions. So these are the countries under the EMEA region. Sub-Saharan, you can see that's where we are. Ethiopia, Ghana, Kenya, Mauritius, Nigeria, Rwanda, South Africa, Tanzania, Uganda, and Zimbabwe, while the other countries sit in the other sub-regions. So once you are qualified, if you succeed and proceed, we'll be going to the regional finals, which will be in April. I'll give you the breakdown of the timelines after this. That will be the semifinals, and the finals will be towards May, with the global finals being in May 2023. So in terms of the competition timelines, the sub-regional kickoff will be in a week's time, and the winner we will send to you a team that will help you put together your presentation. So this is a full day of working with you in terms of how do you present and doing the proper recording that will be submitted. And the advancement announcement will be on 31st of March, with the semifinals between the 6th and 7th of April. This is through live virtual Zoom. The regional finals will be in the 13th and 14th of April, and will be live streamed to a larger audience. And the global finals will be on 3rd of May 2023. This will be in Washington, DC, and this will be live in person. Okay. I hope I've not talked too fast. I'm trying to buy time, at the same time give you as much information as you need. I hope you are prepared. Get yourself psyched. Someone is holding their cheek. Don't be sad. You should be excited and happy. And wish you luck. Thank you very much.
Thank you, Francis. So we'll have Team A ready to present. And then the rest of the teams, one of our volunteers, Karen, will show you the segregated area where you can sit down and have your discussions. But Team A, please be ready to come on stage and present.
Good morning. Okay, so Team A can remain in the room. The other teams can head to second floor. Karen will show you where to go.
Good morning, ladies and gentlemen. My name is Agnes, and with me is Gideon, Brandon, and Derek. We issue a whole recommendation on cooperative bank based on our analysis. We used average weighted average to equally weighted DDM, PE, and PB to get a target price of 10.17 over the with a downside of 23.89, a downside of 23.89 over 12.6 closing price as of 10th Feb 2023. Our recommendation drivers were high net interest margin, maximizing on banks' revenue, strong dividend policy, maximizing shareholders' wealth, and lastly, advancement into the digital sphere to improve performance generally. We also made the following negative observations about cooperative bank. It has not expanded aggressively to regional markets compared to its peers. This may slow down its potential of being the best in the industry. Also, the Kingdom Bank NPL remains high in quarter 3 2022 at 52.4%, though it improved from 60% in quarter 3 2021. This weakens the overall bank NPL. Also, I'll give a brief description of Cooperative. Cooperative is the third largest bank in Kenya with an asset base of shillings 622.1 billion. It serves up to 9 million account holders, and it has over 4,000 employees. Its main income streams are interest income and non-interest income. It is based in Kenya, where it has the main footprint, and in South Sudan. Ladies and gentlemen, also Cooperative Bank offers its services to its members through retail and banking, retail and business banking, cooperative banking, fund under management, and others, as we have shown on the slide. Okay. I'll also mention on environmental, social, and governance. Cooperative Bank strives to promote efficiency and sustainability through, as we look in the environment, it participates in waste minimization. It also participates in green lending, where it gives loans to people who have the best interest in the environment. Also, socially, it participates in ensures employee diversity, cultural diversity, and it also has a cooperative bank foundation where it offers, it supports the needy and bright students. Also in governance, it has 26 directors who represent their shareholders. It has a board of directors with varied knowledge and expertise. It also ensures sound remuneration framework. I'll now give Gideon to continue with the banking sector overview.
Okay, thank you, Agnes. On the banking sector overview, I'll start with the macroeconomic conditions. And the average inflation rate for the last 5 years has been 5.78%. That is, has been accommodated by the CBK monetary policy. The average loan interest rate and the deposit rate has been 12.7% and 7.43% for the last five years. This is due to the study of deposits and study of deposits and the accommodating policy that is taken by the KBA and the CBK. I move to asset quality. So asset quality is a bigger concern in the banking sector, with NPL deteriorating from 10% in 2016 to a 7-year peak of 14.5% in 2020. That led a 1-year restructuring of loans worth 1.7 trillion. That translates to 57% of the loan book at that time. Move to the banking sector, recent developments. There has been approval of the banking institutions' risk-based lending models. The digital credit provider regulations that put the digital credit providers in the ambits of the CBK to regulate their transactions. Go next. Okay, the competitive drivers of the Cooperative Bank. So Cooperative Bank of Kenya is a leader in providing financial services to cooperative movements in Kenya with 15 million members. That translates to 40% of the domestic Kenyan GDP and 27% of the national savings and deposits. Go to revenue channel diversifications. Cooperative Bank has diversified these revenue channels and operates in cooperative banking, stock brokerage, business banking, personal banking, and retail banking. Expanding digital channels, which translates to which Cooperative Bank has adopted e-credit, M-Cop Cash, Cop Kwa Jirani, and mobile banking, which has members that transact through mobile banking. I now welcome Brandon to take us through investment summary.
Thank you so much. On to investment summary. We reiterated our statement on hold recommendation based on the following merits. Number one, we have the high net interest margin, where the bank has recorded an average net interest margin of 8.9 and 8.2 in the recent financial, which is 6 points higher than the industry of 6.68%, doing better compared to its peers. Then we go to the strong dividend policy, where the bank has recorded a payout of 35.5% and a dividend yield of 11.2%. We expect the bank to rehabilitate Kingdom Bank and increase on SME market share so as to improve on revenues, thus being more dividends in the future. Then we have the advancement in the digital sphere, where the bank has made significant investment on ICT, and which will boost on the bank revenue going forward. Now I take you to financial analysis, where our financial analysis was based on the following assumption. We have profitability, where we talk about the ROA and ROE, where the bank has recorded a favorable ROE and ROE of 3 and 17% respectively. The bank has also grown its assets by 12%, of which we expect this to persist going forward due to the bank signs of profitability in the future. Then we talk about, on efficiency, we talk about the cost to income ratio, where we expect it to grow at a lower rate of 57.1%. This is due to the bank digitalizing most of its operation. Now I'll take you to liquidity, where the bank has been rated by Moody's and Moody's BBB outlook, with stable outlook, and affirmed by Fitch Ratings. Now I'll welcome Derek Isinga to take us through valuation and investment risk. Thank you.
Thank you, Brandon. We employed DDM, PV, and PV to value the company and weighted them equally. We sourced a beta of 0.947, a risk-free rate of 13.95, based on 5-year government bond issues in 26th January, and county risk premium of 3.29 from Adamoda. These assumptions were used to calculate cost of equity. The cost of equity was then used to discount the dividends together with the terminal value of 5.04 to arrive at a value of 9.07 for a DDM valuation. We also source industry book to value and price earning from 5 biggest banks listed with the NSC to arrive at a price of 9.48 and 11.97 for PE and PV respectively. We then equally weighted the 3 valuation model to arrive at a true intrinsic value of 10.17. We also did a scenario analysis for our valuation to see how our intrinsic value will flex over 3 variables: the cost of equity, terminal value, and cost of equity on 7. Holding the cost of equity at 17%, it shows an increase of 3 and 6% on impaired share price. On investment risk analysis, we assess the risk and show the following. Post-acquisition risks showed a low probability, low impact. Cyber security, moderate probability, high impact. Forex exchange showed a moderate probability, moderate impact. Competition showed a low probability, low impact, whereas compliance showed more moderate probability, low impact. The bank has also put in place some mitigation to counter this risk. For post-acquisition risk, it has made sensitivities and scenario. Thank you.
Thank you. So we'll quickly jump into any questions. I only have one question. Why did you use a discounted dividend model and not a discounted cash flow method?
We use a DDM method because the bank has been consistently paying dividends to the shareholders for an average of one shillings per share for some time now.
Thank you for the presentation. I note that you presented that Cooperative Bank has had a better performance compared to the peers. I would like to know from your analysis, is this better performance sustainable in respect to quality of their earnings? Thank you.
Come again.
From your presentation, you mentioned that Cooperative Bank has performed better than its peers, right? I would like to know from your analysis, is this better performance sustainable?
We believe the performance are sustainable because first, it has based on the recent financials for the third quarter, comparing the net interest margin performance and the dividend payout. It showed it performed intangibly to the market. And we believe going forward, the performance will be sustainable. Go to the slide like evaluation, comparable to the peers. That one. If you see the return on equity and the book value and the PV and the industry, these are 5 banks listed by the NSC. If you look at Cooperative Bank, it made a 0.5 multiple on price to book value and price to earning of 3.1. If you compare it to the industry, it is 0.7 and 21.5. So it is performing intangibly with the market. And we believe going forward, the bank will still perform intangibly with the market. It won't perform so poorly with the market.
Thanks for the presentation. I have a question on your valuation. You came up with a fair value of 10. Is that correct?
Yes, 10.17.
Relative to the current market price, that's 24% lower.
Yes.
Why would you recommend that we hold something in our portfolios which is going to be a loss-making investment according to your estimates?
Compared to the market, the factors that drives the market is because due to the demand and the supply. But in the industry, it's supported on its own, the ability to grow its assets. Yes.
Okay, so thank you for that. There are no more questions from the judges. Thank you and all the best.
Thank you.
Please go ahead.
Okay, this is a team B here to present equity valuation in cooperative bank. Our target price in 52 weeks will be 15.55. That's an upside of 26.4%. We recommend buy in our recommendation. The cooperative bank is the largest cooperative bank in Africa and the fifth in market capitalization at Nairobi Security Exchange. With the bank, with the vision of being a dominant bank in Kenya, is also in our recommendation. Our target price is based on discount, dividend model, excess return, and relative valuation. Our recommendation is based on its unique business model, the group strategy focus, acquisition, and increase in revenue and growth. In business model, the bank provides banking insurance, stock brokerage, leasing, fund management, trading, investment service, custody service, advisory service, and cooperative banking. In acquisition, the bank acquired the Jamii Bora, which later came and renamed into Kingdom Bank, with a 90%, which that means it's have 90% of shares of profit contribution and also in voting rights. Increased revenue, the bank increased revenue 8% compared to from 2021 to compared to 2022 to 2020. That's to 578.8 billion. And also there was an increase in shareholder funds, and there was also an increase in profit before tax by 58.6%, and the growth rate in net interest 12.9%, and also 11% in an interest income. In business description, I'll give it to Laura, who will take it through it.
Business description. So cooperative bank started as a cooperative society in 1966. And in 1968, it was issued a license. And then it became a fully fledged bank in 1994. And in 2008, it was listed in Nairobi Security Exchange. Business segments. So the bank has a customer base of 9 million, and it also has alternative channels like M-Corp Cash, internet banking. It has 561 ATMs, over 26,000 cooperative Coop Kwajirani agents, diaspora banking customers, over 19K, which are over 19K, and 24-hour customer center. Geographical reach, so it primarily operates in Kenya and also has in Uganda and Tanzania and South Sudan. In South Sudan, it was founded in 2013 and in collaboration with the South Sudanese government, which holds 49% of the common shares, and Cooperative Bank has 51 shares. Company strategy. The company strategy of Cooperative Bank is to be the dominant bank in Kenya and the region. And they want to acquire this by investing more in technology than competitors do, keep up with digitization efforts, stay ahead of the competition, use a successful global business model, and boost employee productivity. Industry overview and competitive positioning. So they have a strong brand, which is Coop Bank, best bank dominance in Kenya, best asset manager, micro, small and medium enterprises, MSMEs dominance, customer-centric approach and business model. For valuation and financial analysis, I'll give it to Gladys.
For valuation, we issue hereby recommendation on Cooperative Bank with a target price of 15.55 shillings, representing a 26% upside from the last closing price of 12 shillings as at 1st January 2023. Our target price of 15.55 shillings is calculated as weighted average of two valuation methodology, that is absolute valuation, which accounted for 30%, and relative valuation, which accounted for 70%. We use equidecided valuation methodology because of the bank's unique capital structure, which demands a special handling of debt, interest, and regulatory capital. For excess return model, we arrive at fair value of 18.67, assuming a cost of equity of 16.23%. For DDM, we forecast that Cooperative Bank will attain a DPS of 1 shilling for the next year before increasing terminally at the rate of 5% based on cost of equity of 16.23 and return on equity of 18.3%. And there we arrive at implied share price of 4 shillings. For relative valuation, Cooperative Bank traded at LTM PPE of 4.54x compared to the comparable set of 4.68x, and arriving at an implied share price of 16.24 shillings. For profitability, Cooperative Bank attained a record profit. For instance, in 2020, their profit was at 14 billion, and 2021, their profit was at 22 billion. Asset quality. Cooperative Bank maintained a strong asset quality. For instance, their gross non-performing ratio declined to 13.1% in 2021 from the 14.1% in 2020, positioning the group below the industry average of 18.2%. I call upon John to take over.
So in capital management, we have capital adequacy ratio, which the bank maintains a minimum provident ratio capital total risk of 15.6, which is above the regulatory requirement of 14.5 as per 2021. In capital raising, the bank raises its capital through various sources, such as ordinary shares, share premium, retained earnings, and interest loans, and intangible assets. In capital allocation, the bank allocates its capital to various investment opportunities based on risk-return profile, and the amount of capital allocated to each operation is based on primarily on the regulatory capital. So next is on the risk, investment risk. We have valuation risk, which Gladys has spoken about, scenario analysis, which is the best and the worst case. There is the relative valuation, and the market risk is affected by inflation rates, exchange rates, and industry risk. So in ESG, we have the environmental, whereby Cooperative Bank has been involved in conservation of the environment, whereby they help in sustainable environmental status, as they help in, let's say, for example, they help in the solar energy, and they won awards for being among the best in involvement in environmental health in Kenya, which include the Visa Awards in 2021 and Financial Reporting Awards. In the social, Cooperative Bank has been involved in the social environment, whereby they have been involved in sponsorship of students. They help in healthcare projects, building hospitals, and they also offer charitable donations, let's say during natural disasters and see. Yeah, and there's the governance, which the directors help majorly in making decisions which are in favor of the investors and stakeholders. Thank you.
Thank you very much. Maybe for the judges, you have questions?
Thank you for the presentation. When you covered capital raising, you mentioned different sources of capital. I would like to know which is the cheapest source of capital for Cooperative Bank?
I think it is issuing of ordinary shares.
Thanks for the presentation. You talked about your valuation using DDM, and you got a valuation price of 4 shillings. Was that right?
Yes.
And the excess return, I missed that. What was the valuation?
For excess return, it was 18.67 shillings.
Why the big disparity between the two? One is 18 shillings, the other one is 4.
We also had for relative valuation, we had 16.24 shillings. I think that there is the difference because for DDM, there is a special way of, we have to consider the special way of handling debt, and we didn't include the EBITDA.
Okay, thanks. 2 questions from me. So for your valuation methodologies, use 2 of them. One had a weighting of 70%, the other had a weighting of 30%. What informed those weightings?
Okay, those weightings, due to, is a bank, and a bank has a unique financial statement, whereby it's hard to determine the debt of a bank, financial institution in general. So that's why we give a weight of 70%, considering that other part.
All right, thanks. The last question for me is, in one of your slides where you are undertaking the revenue comparisons at the bottom, I noticed a mention of I&M. You know, why that particular bank as a comparator to Cooperative?
It's because it is the peer competitors of the Cooperative Bank.
Thank you. I have a final question. What's the difference between CSR, corporate social responsibility, and ESG, environmental, social, and governance? What is the difference between CSR, corporate social responsibility, and ESG, environmental, social, and governance?
The CSR is the corporate side of of the business, while the ESG is involvement in the society and how it helps the society. But the other one is for governance and its corporate functions.
Thank you. I think we don't have any other questions. So thanks for the presentation and welcome to follow the proceedings. Welcome, Team C. Please proceed.
Hello, good morning. This is Team C, and I'm Weekly Fotieno, the team leader. My colleague is called Collins Basuben, and the other team member is called Crystal Gale, and there we have Faith Erungu. We'll be taking you through this time. So the first person who will be taking us through the slide is Crystal Gale. Thank you.
Good morning, my name is Crystal Gale, and I'll be going through the business overview and background of Cooperative Bank. We made a whole recommendation with a target price of shillings 13.83. Our target price was 3.45 downside from our last close price, which was 12 shillings and 40 cents. Our PE and PB were 3.52 and 0.76 respectively. Our beta was 0.12. Background, Coop Bank is the largest cooperative bank in Africa and the largest bank in terms of asset base. That is, it has 593 billion shillings and 9 million account holders. The bank was listed in the NSE at 2008, with the largest shareholding being Coop Holding Society Limited at 64.5%. Currently, 94% of transactions are executed outside the branches. Coop Bank is one of the market leaders in corporate and retail banking, and it generates revenue from multiple sources, i.e. traditional income, which we have net interest income, and non-traditional income, which we have non-interest income. It also has the bank has also made a significant investment in digital banking, i.e. we have mobile banking and agency banking. And it has also, this mobile banking and agency banking has led to an increase in the performance of the bank in the industry. Thank you. I'll now invite Faith Irungu to go over COP versus its competitors and the ESG.
Thank you. The COP and competitors, then the overall performance of the sector has been steady, majorly driven by the stable macroeconomic conditions due to the effective monetary and fiscal policies, increase in innovation among the key players through the adoption of digital channels and effective enterprises risk management policy adopted by the major players to enhance high quality and quality of the assets. The overall sector ROE and ROA portfolio yields and NPL ratio has been stable over the past 5 years. Then we have the ESG. On our ESG, the environmental, social, and the governance. Under the environmental, we have the environment and climate changes, where we have limiting our exposure to the climate risk. We also have developing agents on the climate changes. We have responsible resources use, that is effective use of the energy and water. We also have focusing on the reducing waste. We also have the social. Under the social, we have economical, social, and physical. We have financial inclusions. Under the financial inclusions, we have provide relevant financial education and advice, increase access to the credit, increase convenience and access to the financial products and services. Under economic inclusion, we have financial intermediaries and the economy. In the economy, we have facilitating the trade and investment flows between the countries and the key global markets. On the social inclusion, we have employees' health and well-being, CSR, philanthropy. We also have the governance, where we're formulating and integrating an ESG in our operation, strong business ethics and integration, that is doing the right thing by our stakeholders and the planet.
On financial analysis, we have a core bank, return on asset, return on equity, and loan portfolio trajectory. So the return on asset and return on equity are stable and in tandem with the industry performance. Core bank has recorded a 5-year average ROE and ROA of 18% and 3% respectively for financial year 2022, and akin to the average banking performance, 22% ROE and ROA 3.3% respectively as of financial year 22. The stable loan portfolio in core bank has recorded an average portfolio yield of above 13% for the past 5 years. This is majorly attributed to both stable growth on loan book and net fees commission. Efficiency, you have cost to income ratio. The historical average cost to income ratio has been 60% mark, except for year 2020, where it hit 73%. Operating expense ratio is a measure of, it has been, our analysis reveals a 5-year historical average expense ratio of 10%, which has been stable over the past historical years. Next. The net interest margin of core bank have been 8.8 over the past 5 years, and the peer have been 6.6%, and then we also predict 11% in our forecast. Next. Tier 1 capital position. The historical average Tier 1 capital of core bank has been 15%, above CBK 10.5%, and we forecast the ratio to be 16% during our projection horizon. Next.
On valuation, we both use the absolute and relative valuation models. So in absolute, we use the discounted cash flow and dividend discounted cash flow model. On relative, we use the price to earning ratio and price to book ratio. On valuation matrix, the dividend discounted model, the fair value we arrived at 16.47, whereas the dividend cash flow was 11.85, which resulted to an average of 14.16. On the discounted, on the relative valuation, we had PE and PB, which PE multiple was 14.11 and the PB multiple was 12.90. So the average of PE and PB, we arrived at 13.51. Both absolute valuation, we took 50%, and relative valuation also we took 50%. Next. Then we used also the sensitivity analysis that we regressed weighted average cost of capital against the risk-free rate to arrive at the target price of 13.83. In risk sector, we had the main risk that was the market risk and operational risk. In the market risk, we have competition arising from other commercial banks, which majorly deals with major banks like KCB and Equity. And we had also volatility of currency, which resulted as the change in the currency rate. Yeah. So operational. In operational risk, the disruption in technology channels through cyber attacks, fraud, and ICT infrastructure. Yeah. So our sister will take us through the conclusion part. Sorry.
Thank you very much for the presentation. Maybe to the judges, any questions?
You touched on macroeconomic factors, and in that space you mentioned about the monetary and fiscal policies, yeah? Kindly distinguish the two, monetary and fiscal policies. Thank you.
Monetary policies are the policies that Central Bank of Kenya come up with in order to regulate the money supply in the economy. And fiscal policy is a government policy which monitors the spending habit in the economy. That is.
Please go back to your slides on your return on equity. There's a slide you had there on that one. So your return on equity is declining over the forecast period. And on the next slide, your company's efficiency is improving. Is it that the return on equity is declining, yet the entity is becoming more efficient?
So the return on equity is as a result of digitization of performance and banking performance, banking services, and a reduction of loan loss provisions. For instance, in year 2019, it reduces from 2.5 billion. It increased to 8.1 billion to 2.5. Sorry.
Another question from the first slide. One of the first slides, you said that 94% of the transactions of the bank happen outside of the branches. Is that correct?
Yes.
And they have 178 branches. So should they close these branches if most of the customers are doing their activities outside of the branch?
No, because
I would say no, because there are some services that you have to go to the bank. For example, like opening a bank account. You cannot open a bank account via your phone, online. So you'll be having to go to the branch or the main bank. Yeah.
So they should keep the branches open just for account opening? All those branches?
We said it's 94% due to the digital transactions that occur through the bank, the deposits, the loans, and others. That's why we said it's 94%, which has led to a growth of 58% in the money transactions. It is 9.11 in the loan book, and 11.5 in the deposits. Yeah. Do you know? Yeah, they do. It's online. Digital banking.
Okay, thanks for the presentation, guys. On one of the slides, you spoke to market risk. One of the things that you mentioned there was volatility in currency. Please expound on why you deemed that as a risk for Cooperative Bank. Thank you.
Volatility of currency. So here we focus on Kenya currency versus US dollars. So for the past years, Kenya shillings versus US dollars has not been stable. This is attributed to high demand of US dollars by the companies, and the currency in Kenya, the value has been decreasing as a result of inflationary activities. Yeah.
Okay. Thank you very much, and all the best.
Morning, this is Team D. My name is Tim Makale. Together with Vanessa Gishio, Sonia Mwende, Felix Ichao, and Tonya, we are presenting our buy recommendation for Cooperative Bank with a 12-month target price of 14.68, presenting a 16% upside based on the close of yesterday at 12.65. This is based on 3 key factors. Firstly, the stability of the stock price. If you will follow the blue line on the diagram on the left, you will see a consistent yield of about 8% based on the dividends given out by the cooperative bank. Secondly, the low operating cost relative to income. This is based on the announcement of the Q3 financials, where income went up 47% and cost only went up 26%. Finally, the Soaring Eagle Transformative Initiative, where they focus on decreasing the NPL and data analysis for better credit giving. Next, I will give Sonia for business description.
The Cooperative Bank Limited of Kenya was initially founded in 1965 and incorporated and registered under the Cooperative Societies Act. And then it became listed in the NSE as at 22nd December 2008. It also has various subsidiaries other than the commercial bank that generated income, with, to mention a few, Kingdom Bank Limited and the Co-op Trust Investment Services Limited. Advantages of these subsidiaries include diversification of the business lines and revenue streams, expansion of their customer base, and access to new markets and geographies, specialized skills and expertise in areas such as wealth management, insurance, and investment banking. They have a well-diversified loan book, which basically helps in minimizing risk, such that if one of the loan programs went down, like not all of them are in the same pool. So it also reduces loan, like probability of the bank going down is low. Okay, sorry, can we acquire some assistance? Thank you. The company also has total assets of 579 billion and profits before tax of 22.6 billion as at 2021. However, it's important to mention that with the Q3 2022 report that came out, the total assets have increased to 622.1 billion and the profits before tax to 37.9%. I'll take you through the industry overview. So as of 2021, the finance sector at the moment stands with commercial banks at 43, microfinance banks at 11, and 1 mortgage finance. As you can see here on the right, there's a graph that shows the interest rates from 2018 until now. The total assets in the industry right now at the moment stands at 40 billion, and we can also see that the industry has undergone a lot of digitization, which helps to ensure that customers can acquire different services at their own convenience, so they don't have to go to the bank. They can all do it from the comfort of their homes and on their phones. We can also see the demand drivers and the supply drivers of the industry are shown on the slide. The competitive positioning of the bank includes 2 main factors, which is the market share and bank presence and the customer service, where market share has increased, as you can see, with over 180 branches. MCOP Kwajirani agents are over 4,000, many 550 ATMs, and 20K plus diaspora banking customers. We can also see there's expansion in the South Sudan banking area with Cooperative Bank, and the subsidiaries which have also increased the market presence. Customer service, we can look at the We Are You, which is their motto, which is what they use to say that they are in, they stick close to the stakeholders and customers so as to ensure that they do their best. Thank you. Now I'll hand it over to Vanessa to take us through ESG.
Good morning. We'll be looking at the ESG, which is basically what the cooperative bank is doing in order to make an impact to society. Now we begin with the environmental aspect. They are concerned about the environmental and climate change and the prudent use of resources, because they aim at producing more with less being put out in terms of waste. And as mentioned earlier, there has been digitization. Yes, that has been done, which has helped the company reduce its waste. Then we move to social impact that they have done to the society. At the moment, we can say that over 7 million students have benefited from the scholarships and bursaries provided by the bank. Now let us move to governance. Governance is basically based on what the company, how the company is structured. And we can say from the 7 regions of the country which the board of directors have been selected, it has allowed for diversification in terms of knowledge and everything they're able to do. And finally, we can say that in governance, I think that's it, yeah, for governance.
I'll now quickly take you guys through the valuation. As Tim earlier stated, we got a target price of 0.68, which came about as a weighted average of 3 methods, 3 being absolute and the other being the relative valuation. The 3 methods we used were the dividends discounted model, the free cash flow to equity model, and the relative valuation. It's being specific, the price to book value ratios, and we assigned weightings of 50, 25, and 25 respectively to the 3 methods. The reason why we assigned a higher weighting to the DDM method was because of the subject company's cooperative bank reputation of paying dividends to its investors. The assumptions we considered or we made while evaluating our company were the ones stated on the slide. We used a risk-free rate of 14.39, which is a current 10-year bond yield, the risk premium of 9.49, a beta of 0.6, a CAPM cost of equity of 20.08, and a growth rate, CAGR growth rate of 8%, a terminal ROE of 16.1%, and for the DDM, a terminal payout ratio of 47.64%. For the relative valuation, we compare the performance of the ratios, the key ratios of its fellow tier 1 banks, and came up with a value of 13.5 with a weighting of 25%. The FCFE valuation was 15.9 and the DDM valuation was 14.64. Next slide. As you can see, this is, it just shows the growth in the net income, and that's how we computed our growth rate of 8%. And now I'll pass it on to Tonya to take us through the financial analysis.
So for the financial analysis, we focused on 4 main ratios. For the ROE upward trajectory, Cooperative Bank has a soaring eagle strategy, which focuses on improving its revenue streams and reducing its operating cost. This leads to a high net income, and the net income leads to a high ROE, hence efficiency. For the year 2025, we expect an ROE of 16%. For the leverage and liquidity, Cooperative Bank has been growing throughout the years. For now, it had total assets totaling to 579 billion in 2021, and assets totaling to 622.1 billion as of Q3 2022. Its PBT is 22.6 billion. Cooperative Bank has a downward trajectory of NPL. For year 2020 and 2021, the NPL reduced from 25% to 16%, leading to economic growth from the poor economic conditions, and we expect a NPL of 10% in 2025. The shareholder compensation, Cooperative Bank has a healthy compensation, giving its shareholders dividends of 1 per share, and it has a payout ratio of 58% and returning the rest to the market. I'll give it to Tim for the investment risk.
Finally, we'll look at the investment risks, where you'll notice that we have analyzed credit risk as a high probability, moderate impact. Geo is high. Interest rate lies at moderate, and finally cyber should have been on the other side. I apologize for that. It should have been high probability with low impact is what I meant to do there. We did a Monte Carlo simulation with 10,000 times to get the mean standard deviation and other values, as you can see. We tested 2 sensitivity analyses for looking at the cost of equity and the terminal growth. Yes, thank you.
We're done? Maybe I missed it. Did you talk about ESG?
Yes, ESG was taken by Vanessa.
Now I remember. Okay, thank you. I didn't note it down. Judges?
Thank you for the presentation. We note that under absolute valuation, you used free cash flow to equity valuation, right? And in relative valuation, you went for price to book value. Why did you choose price to book value over price to equity ratio?
I apologize for that. It should have been written price to earnings. We did use a price to earnings, and I could explain why we justified a price to earnings over a price to book value. That is because, you see, we used a median price to earnings, and for that, it's taken from all the banks. Given that they have a wide book value, we wanted a more consistent range to look at, and so we chose to use price to earnings. What was your question on the free cash flows?
I just wanted to know why the different choices of the earnings, cash flows that we are using, because on absolute, we used free cash flow to equity, but then on the relative, we went for price to book value. But then you've clarified that it's actually supposed to be price to earnings ratio.
Yes, yes.
Okay, thank you.
Sorry, I'd like to ask that question in reverse. Why didn't you use price to book?
Price to book?
Yes.
Because of the price to earnings that we used was a median of all the banks. And for that reason, their book valuations are so varied. Like we have larger book values, smaller book values. And so that range we didn't see as a nice way of looking at the industry. We preferred to look at the earnings. Another reason possibly could be the fact that book value is somehow based on accounting methods. And so earnings is a better solution as it gives a direct, this is the direct earnings. There's no...
What if you did a sort of extrapolation of the price to book vis-a-vis the return on equity? Would that have helped resolve that variance in the price to book?
Yes, it would have. That I would just say maybe a time constraint. We preferred to go direct to price to earnings.
Okay, thank you.
Just on this slide, your expectations for the company are that the cost of equity or the return that equity must earn for the business is 20.08%. That's right?
Yes.
So the expected return that this bank should be able to achieve should surpass 20.08.
Okay.
That's what cost of equity is.
Yes, I get it.
So the bank is expected to have a return on equity of 16.1, which is lower than the cost of that same equity. Is that a good investment?
Okay, I can go first and then maybe he can improve on my answer. So my thinking was when we were getting the return on equity, we had to, a combination of CAGR and straight lining. And so it looked at the weighting we'd give, since we weighted the years between 2017 and 2021 equally, the low ROE of 2020 and 2021 due to COVID had an effect of the CAGR. And that's why when we projected the 16% for 2025, it is because of the low of 2020 and 2021. But if we were to continue, like the projections we did were all the way to 2027, where they would reach 19%. And if I could even specify more to their Q3 announcements, their return on equity was 23% for the Q3 of 2022. So that shows a possibility of it returning higher than the cost of equity.
So your terminal ROE is from which year?
It's from 2027 and beyond, because we use the 5-year valuation period.
So do you expect your cost of equity to have declined by then?
As of after the 2027 we expect the cost of equity to gradually go back to to be casually lower.
What's keeping it elevated currently?
The cost of the high cost of equity, the hard economic times that we just experienced, and also we are in a period of recession, and that's that's the main reason why the cost of equity was high as of now.
Maybe the question to that is, what's the current ROE?
The current.
The current ROE as of Q3 announcements 2022, 23%.
Okay. Okay. Believe you don't have any other questions. So thank you very much, and all the best.
Present our report on Cooperative Bank. The team constitutes of Myra, Brittany, Cynthia, Ocheng, and myself, Jonathan.
So we're recommending a buy for the Cooperative Bank of Kenya because it is definitely for you. Our recommendation is based on 3 major models. The first one is the DDM, the dividend discount model. The second one is relative valuation, and the third one is the DCF. Oh, sorry. Okay, what's going on? Cooperative Bank of Kenya. And based on our valuation, we're recommending a buy for the Cooperative Bank of Kenya. So we use 3 major valuations to come up with a weighted average of 40.5 shillings. That is our estimated fair value in 2025. This presents investors with a 219.9% upside. With over 14,000 cooperative societies in Kenya, the Cooperative Bank of Kenya can be able to be deeply rooted into the Kenyan market. There are three major catalysts that made us come to this recommendation. The first one is the market expansion. Over 94% of cooperative banks' transactions are done online. This means that Cooperative Bank of Kenya has taken into account the online digital space. With an ever-growing market in that sector, this means that the bank can be able to expand and capture more market. The second one is strategic partnerships. Cooperative Bank of Kenya has been able to partner with a lot of governments and private firms. The first notable one is with the Kenyan government last year, where they were enabled to distribute the Hustler Fund. The second one is with IFC and European Investment Bank. This is in a social contrast to try and improve people's lives. The third one is new product and service offering. Recently, Cooperative Bank of Kenya released a new product, a pension-backed mortgage, which is the first of its kind in the Kenyan market. In the overview of the Cooperative Bank of Kenya, the bank has 3 major subsidiaries, the Kingdom Bank, the Coop Trust, and the Coop Bank Assurance. Notably, it has 37.5% controlling stake in CIC. Other than that, the governance of the bank is really strong, with an average tenure of 9.5 in the board, which is really notable compared to other competitive banks in the space. Also, the bankman CEO, Gideon Miriki, was able to be given was given a trophy for the best CEO in the bank last year.
Thank you for that. So let's just step back and take a bird's eye view of Cooperative Bank. Cooperative Bank is basically $622 billion worth in assets. It has 4,700 plus employees. It has a loan book of well over 300 billion Kenyan shillings. And basically around the business strategy, it's customer-centric. It takes into account the ethics, and it's highly focused on high-quality financial services. The bank has a really strong product offering, which ranges from account types, credit facilities, and financial services. And this earned it an award from the Global SME Finance, as it got a notable mention. Diving a bit deeper, let's talk about the revenue drivers and expense drivers. Revenue drivers, we have things like interest, fees on services that it provides, foreign exchange fees, to mention about a few. On the things that drive expenses, we have things like employee salaries, interest given on deposits, to mention back a few. To step back and understand the broader economy in which Cooperative Bank is playing in, the major factor that we have right now is inflation, which has been looming, but the Central Bank of Kenya has been really hawkish in its approach and has been raising interest rates, currently standing at 8.7%. And to understand what's driving economic growth in Kenya, as you can see clearly, it's the services industry, which Cooperative Bank is playing in. And just talk a bit more about it. The economy grew by 6.7% in Q1. Services sector is the main driver of this growth. And talking about inflation, most of the inflation that is happening right now is mainly due to the fuel prices and food prices. And year-on-year inflation is at 9.1%. However, we already mentioned that the central bank is raising interest rates to try and tackle that. And this is just a piece to show you how interest rates have been rising since last year. And yeah, and this is a piece on basically how other currencies are fluctuating in regards to the Kenyan shilling. As I mentioned earlier, we've been in uncertain economic times, hence the high levels of fluctuation. Stepping back a bit more, one of the very important things we need to talk about when we're looking at banks is asset quality. And this piece basically tells us about the asset quality of Cooperative Bank. Basically, what we can see here is that non-performing loans account for 12.6%. However, loan provisions dropped by 5%, implying that the asset quality, risk management has become better by the bank. And the bank has about 2.5% presence in the areas in the industry which are responsible for most of the defaults. The bank is well diversified by client type and by sector in the loans it provides. And basically, just stepping back to understand the banking industry as a whole, the banking industry has hit 6 trillion Kenyan shillings in terms of assets. There's been various regulation, and basically it contributed almost 50 billion Kenyan shillings towards taxes last year.
Thank you, Jonathan. I'll take you through the SWOT analysis. So for the strength we have, 94% of the transactions of the bank are all online, showing that the bank embraces technology, which gives it a competitive advantage over traditional banking. For the weaknesses, it has a limited customer base, meaning they have a concentration of customers. For the opportunity, in the Kenyan market, we have a growing demand for financial services, which poses an opportunity for them to expand. And for the threats, we have the economic and political instability in Kenya. For the Porter's 5 forces, we have threats of new entrants, which is considered quite low because the industry is heavily regulated, meaning there's barriers to entrance. We have the threat of substitutes, which is quite moderate because the bank has been able to differentiate and create a strong brand for itself. For bargaining power of suppliers, it's considered to be quite low because the bank is well positioned and it's able to negotiate well with its suppliers. For the bargaining power of our buyers, it's moderate as well. Then the rivalry among existing competitors is considered quite strong because we have the many well-established commercial banks in the country, thus the competition is quite high.
So in order for the bank to achieve most of the vision, they had 6 pillars into their strategic focus. And one of the most important focus we put on is on the 6th pillar, which is positive impact on the economy, society, and the environment. So this initiative has led them to get several awards from it, including the Energy Management Awards.
In terms of competition, Cooperative Bank of Kenya is vast in a really competitive market, but other than that, it's in a tier 1 bank. It's a tier 1 bank in the Kenyan market. This means that it performs really well, and it's a good bank for you to invest in.
All right. So one of the important things are the economic, social, and governance frameworks that Cooperative Bank has put in place. And the reason why is because they understand its importance not only in environmental impact, but also in economic performance. So they've looked into they've done several things on the environment, social, and governance efforts. And on the environment, in 2021, they were able to put in place 1.7 billion Kenyan shillings into green lending funding. And also, other than the environmental initiative, we have the social initiatives. So one of the things includes sponsoring up to about 9,000 students now in high school. And also another thing is offering training and funding to the MSMEs and including also the employees who are able to also benefit from some of the social efforts. Other than that, looking into their governance, one of the great things is that their governance is quite sufficient enough to manage the risk within the company.
Diving quickly into financials, as we can notice, the earnings per share of the bank have been increasing year on year. Its net interest margins have been growing as well, and as we can see on the far left, we've had great increases in the headline drivers of revenue.
For the valuation, I'll take you through the CAPM, and plotting this on the security market line shows that the Cooperative Bank is undervalued. For the work, it has a work that is below its competitors, showing which is good. For the valuation, we use three models: the DCF model, which alludes to a buy, the DCF model, the DDM model, which also alludes to a buy, and a relative valuation model, which alludes to a buy.
We're done?
Yes, we've seen the lady put up the hard stop sign.
Oh, time.
Yeah.
Okay. So maybe we'll open it up to some questions.
Take us through your DCF.
All right.
For the DCF model, we forecasted the income statement, the cash flow statement, and the balance sheet, and found we came up with the equity value coming to that amount. And when we value it through the DCF model, you come with a price of 68.1 shillings and an upside of 438.5% in 2025.
Your DDM was lower.
Our DDM model is lower because over the past 4 years, the bank has maintained the rate at which it pays dividends. So we just forecasted that rate and got the price, which is 25.5 shillings.
Okay. I have a question on your SWOT. You cited that the bank has a very strong competitive position as pertains to its suppliers.
Sorry?
On your slide on the SWOT analysis, the 5 forces, Potter's 5 forces, you cited the bank has a very good position as pertains to bargaining power of suppliers. Who do you consider to be the bank suppliers?
We used the ESG reports. It didn't quite specify much about the suppliers. Yes.
Probably just show a bit more light on that. The bank is a services business. So basically, most of its suppliers are Kenyan-based. So it having a very strong position in regards to suppliers basically implies that the suppliers obviously would like to get very good business from the third largest bank in Kenya. Therefore, the bank has a higher bargaining position because they have multiple other options. Therefore, they can bargain for better prices when it comes to suppliers. Does that answer the question? No, exactly. Probably didn't get your question right.
The bank has a competitive edge in that the suppliers of the bank are not, don't have an edge over them as pertains to interaction with the bank.
Yeah.
So who would you consider to be the bank's suppliers? What does the bank need in order to do its business?
The bank, basically most of its efforts come through the people that work with the bank. So there's a relatively big skill pool which they can pull out from. So in suppliers, I'd like to probably call them enablers. So people work for the bank and the like. So they have the option of picking talent from various different other markets. So most of their talent is local, and that optionality basically gives them a bit of an edge in industry. Is that better?
Thank you for the presentation. Kindly, let's go back to the DCF slide.
All right.
Mm-hmm. I would like to start with an assumption, but please correct me if I am wrong.
Yeah.
This DCF, is it correct for me to assume that this is, you've discounted the free cash flow that is available to equity holders?
Yes.
That's correct, yeah?
Yes.
So if we have all this free cash flow that is available to the equity holders, it's quite significant. I mean, looking at the upside that you've arrived at, yeah? Why are they still maintaining a very low dividend payout ratio?
As Cynthia had earlier mentioned, our dividend payout ratio is from the previous years. So in our forecasting, we didn't want to be very lavish of our assumptions. That's why we continued with the historic dividend payout. I mean, it had been the payout that they had done for the past few years. But this is actually a very good thing in that the bank can have the optionality of paying out higher dividends in future, which is really good for an investor to look into. Or the bank can invest this money into more positive net present value positions.
Okay, thank you. And
You're welcome.
based on your response, on opportunities of investing in positive NPV projects, how are the opportunities presenting themselves to Cooperative Bank, bearing in mind its environment of operations, which is very competitive?
Yes, that's a very good question. The environment of operations is really competitive, but right now, taking into account the looming financial times, it doesn't make sense for the bank to more or less invest in things without having properly done due diligence, which is why, again, our assumption is like this. But obviously, there are multiple other opportunities out there that the bank could look into.
Thank you.
Thanks for the presentation. There was a slide on the macros, if we can just find it. There was something that mentioned a fixed rate and then 4%. I was not exactly clear what that 4% was, so please elucidate on that.
Oh yeah, that 4% is basically the should I call it the area in which commercial banks can play around. So basically that's how they can give you loans. Like, so over and above that, do you remember the central bank rate is basically like the ground level of like interest rates. So like that 4% is basically where we can see banks ranging their different interest rates around.
Okay, thanks for that clarification. One other question. You mentioned the loan loss provision had declined by 5%. When was this, and why do you think that is the case?
All right, let me just get to that point. Sorry. Yeah, loan loss provision basically declined by that percentage between Q3 2021 and Q3 2022. What this basically means is the bank's getting better at deciding who to give money to in forms of loans and who not to give money to. So that basically points to its higher quality in risk management.
Okay, thanks for that. My last question speaks to the first slide in terms of catalysts. You mentioned partnerships being one of the key drivers for the buy decision. Now, my question on that front is, to me, it's not clear what differentiates Cooperative Bank in terms of partnerships, because if it's IFC, IFC has also given money to KCB. KCB also partners with the government, who is a large shareholder of them, by the way. So, you know, I wasn't quite convinced what the competitive edge is as a result of that particular aspect. So maybe you can speak to that. Then secondly, on new products, you mentioned a pension-backed mortgage product. Any more color on that particular product, and why do you feel that that is a catalyst for your decision to be a buy?
Okay, so thank you for that question. So the first one, for strategic partnerships, the main reason why we use strategic partnerships and not partnerships is because of the strategic. So you see how when the Hustler Fund came in and Cooperative Bank was able to partner with the government to distribute the Hustler Fund, as an investor, wouldn't you think that it's really big that the government of Kenya really trusts Cooperative Bank to distribute its funds? So this is an edge for them because it brings them a bit higher compared to other banks. For the second question was on new products such as pension mortgages, and my teammate is going to explain on that further. Have I answered your question? Okay, thank you.
Yes, more or less around the pension-backed mortgages issue. What that basically means is that someone can more or less take out a mortgage on, like backed by their pension, which is really innovative because most Kenyans would probably not have the collateral to go out and take such a loan, but probably they have their job that pays them well and they have a pension that they are contributing towards. So that's basically an innovation around how can we give more loans out to people.
I have a question on the SWOT. You had a pie chart.
Oh, okay.
And one of the weaknesses you cited was that the bank has limited or lack of branches and a limited customer base. Do you consider a branch network to be a useful competitive edge or not?
Yes, we do because of access to your clients and your customers. Compared to other banks, it has limited or rather fewer number of branch networks. And yeah, so that is a bit of it poses a risk profile for them, and also for the limited, for the concentrated, it also has a concentrated customer base. That shows that it poses a risk profile in case your customers shift, then that's a huge risk for the bank itself.
Are they offsetting that lack of branches in any way?
Yeah.
Oh yeah, they are, because 94% of the cooperative banks' transactions are done online. That means with the shift from traditional banking to online banking, it has tried to capture the new market in the digital platform. So it's a win for them in a way, yeah.
Okay, thank you, and all the best.
Thank you.
So I think we'll have one last group and then can have a tea break.
Good morning, ladies and gentlemen. In front of is Team B, and I'm here with my colleagues, Team F, and I'm here with my colleagues, David, Sydney, Kevin, and I'm Dawn. We are here to present an analysis of Cooperative Bank. We recommend a strong buy at a fair value of 15.62 based on the expected earnings at 26.9%, which are higher than the optimal value of 25%. On the graph, we have the current share price, which closed at February 24th, 2023. The closing price was at 12.45. I now want to invite David to take us through the company overview.
Hello everyone, my name is David. So the Cooperative Bank is the third largest bank in Kenya and is the largest cooperative bank within Africa. The Cooperative Bank boasts of over 20,000 diaspora customers with over 181 branches, 550 ATMs. So we'll move into the growth drivers. For our growth drivers, we actually looked at the improved loan book growth, the steady growth in customer deposits, and for our risk, we looked at the rise in non-performing loans which lowered the quality of the asset book, and the uncertainty over the electioneering period and the instability in subsidiary markets. For the financial analysis, so for the total assets, we see that the Cooperative Bank had an increase in 9.8% increase in the CAGR, with the drivers being the improved loan book and the asset acquisition and the lease deals. As for the asset acquisition, you can actually look at the recent acquisition of Kingdom Bank, the former Jamii Bora Bank, For the loans and advances, we see that the cooperative bank has a 5.26% CAGR increase, with the drivers being SME and target lending to various sectors of the economy, mobile loans and e-credit being a key factor due to the increase in uptake of mobile loan services. For customer deposits, we see an 8.4% CAGR increase, with a growth in mobile banking and SME and retail segments being among the key drivers.
My name is Kevin, and still on financial analysis, and looking at the income statement. Now, for the interest income, the cooperative bank had a CAGR of 24.73, which indicates an increase in the loan book. The non-interest income had a CAGR of 55.2%, and this indicates that the bank is operating profitably. Moving to the provision for bad debts, the company had a CAGR of 73.67%, and this shows that the bank is at a great position of debt management and loss financing. Now, looking at the NPL, the non-performing loans, Cooperative Bank had a CAGR of 11.97, which had a decreasing effect of 10.89% on the return on average assets. May I welcome the next presenter to take us to the next presentation? Yes.
Okay, I'm Sydney, and I'll be taking through the key financial ratios of Cooperative Bank. The key financial ratio of Cooperative Bank are divided into four. We divided them into four. The profitability ratio, whereby in profitability ratio, our key interest is on return on average asset and return on average equity, whereby the return on average asset is able to measure how cooperative efficiency in converting its assets into profits. On return on average equity, we are able to see the graph on the return on average equity, whereby Cooperative Bank at 2021 at 17.3%, which we can say it's efficient, able to convert the equity financing into profits. Moving on, we have the shareholders funds ratio, whereby looking at the graph, we have the earnings per share. The earnings per share, whereby an increase in earnings per share over the years implies an improving profitability and ability to pay dividends. On the price to earnings, whereby it's able to evaluate, to assess the company's valuation, the price to earnings of Cooperative Bank have been low over the years, which is a good thing to investors, as a low price to earning indicates that the stock prices are cheap and they may rise in future. Moving on, we have the asset quality ratio, and the asset quality ratio, we have the cost of risk, whereby Cooperative Bank has been able to protect itself on the key risk of the credit risk, whereby the cost of risk are very low. The cost of risk being low, this explains Cooperative Bank is at a healthy position. The non-performing loans of Cooperative Bank over the years, the non-performing loans have been below average. The only point the non-performing loans Cooperative Bank were above average was on the year 2020, which the industrial average was of 14.1%, and it went further into 16.5%. The non-performing loans deficit are due to long delays of payment of the mortgages and the loans. Moving on, we have the liquidity ratio, whereby the liquidity ratio able to access a bank ability to meet financial obligation in a timely manner. The liquidity ratio of the industrial average liquidity ratio is at 20%, and Cooperative Bank liquidity ratio is above the minimum 20% required. The liquidity ratio has increased, so we can say it has been increased simply because Cooperative Bank has invested more in liquid assets. The loan-to-deposit ratio, at 2021 is 75.9%, whereby the average of 2021 was 70.1%. What does this mean? This means that Cooperative Bank is able to increase the net interest income by loaning more. I invite
Thank you. Now, on the ESG, we found out that it is the environmental aspect for Cooperative Bank. The bank focuses on transitioning to low carbon economy and developing climate-related change targets, and also financing access to sustainable energy. Here, the company is compliant, utilizes business ethics, and is proactive in environmental and social policy. The bank has also a well-diversified board skill set, with its CEO having an experience of over 33 years in the financial industry. Moving to the social sector, Cooperative Bank focuses on the social, financial, and economic inclusion. And here, the bank has sponsored over 9,500 students, pays over 5.6 billion loans as at the third quarter in 2022, and employs over 74% workers of age 40 years and below. Moving to the governance aspect, the bank focuses on a strong business integrity and ethics, integration and formalization of SDGs in its operation, and here it actively implements the guidance on the climate-related risk management and has an MOU with the United for Wildlife Foundation Task Force. The bank is also active in the rehabilitation of the 259.5 acres in Lusoi, Laikipia County. Let me welcome the next presenter to take us through the dividend history.
So I'll take you through the dividend history. The dividend payout ratio, which is a very key financial metric in determining the sustainability of a bank's dividend program, is currently at 16.6%, a reduction from due to the reinvestment into the bank's operation. The dividend per share, the dividend per share is at 1 shilling, and it has been stable from 2018. The implication of this, it has been able to create certainty to the investors and confidence in the growth of earnings. To the valuation summary, we recommend a strong buy at a fair value of 15.62, which we got through the price to book ratio and the price to earning ratio. We also recommend a buy considering the price to earning ratio is at 3.3, meaning the payback period is shorter for the investors. Also, the dividend per share is 1 shilling, and it has been stable since 2018, so it creates certainty to the investors, and it's predictable. Thank you. We welcome any questions.
I have a question on your dividend payout ratio. You have a pie chart. The bank had the highest payout ratio in 2020 of almost 24%, and that was the same year that the bank's return on equity declined the most. What comments do you have on that?
So in 2020, we know it is the time when COVID was there, and most of the banks, they were not paying out their dividends. Most of the banks stopped paying their dividends to the shareholders, while others reduced their dividends. But Cooperative Bank is the only bank that was still paying dividends to the shareholders. Yes.
So was that a prudent decision that their return on equity was declining and they were distributing equity at the highest rate that they've done before?
So beyond this, the company had employed various metrics to ensure that despite the pandemic, it was going to ensure sustainability in the dividend, and therefore that is why it had to maintain this motive. Also, during the pandemic, most people resorted to online banking, and which boosted the financial portfolio of the company. Thank you.
And maybe to add on that, the return on equity doesn't, in case there is a decline in the return on equity, the bank was able to finance itself for debt, which is able to increase the dividend payout ratio.
My question is on the price to book valuation. Can you go back to that slide, please? So for you to determine, what did you use for the valuation? This one is, where is it? For the price to book, what multiple did you use? You only used earnings, price to earnings.
We used price to earnings and price to book.
Which multiple did you use for price to book?
The price to book gave us a valuation of 15.62, and the price to earnings gave us a valuation of 14.9.
Yeah, I'm seeing you have the price to earnings of 3.3. I'm wondering, what did you use as your price to book to determine the 15.62? Is that the 14.9?
So maybe to answer concerning the 15.2 and the price to book value, we used the multiples of the banks listed to come up with to evaluate the position of the cooperative bank. We found out that the price to book for the Coop Bank was 0.8, and then we were using the multiples to establish the position of the Coop Bank. Since we found out that the average for the 8 multiples was 1.025, but Coop Bank was 0.8, so it was trending at a discount.
That's where I was headed. So did you do a sort of regression to see why equity is trading at a 1.5 price to book vis-a-vis Coop trading at a 0.8?
Pardon?
Did you do a regression analysis to see, because the market pays for a return, and naturally the higher the return on equity, the higher the price to book. So did you do a regression or just use the average?
So we used the average. Our evaluation was based on the average.
Okay.
Please, let's go back to the income statement slide. So the non-performing loans, yeah, that increase that's 11.97% increase. Kindly expound on it. Is it that the loans are increasing, but then I see that that's in green, and that translates to a decrease in ROA. So just explain that.
The increase in non-performing loans, the increase, I'm should cite it, so maybe if you can clarify where you can see the increase.
Because I can see it's increasing, the non-performing loans, right?
Yeah. Yeah, the non-performing loans are basically increasing. With an increase, it means that the payment period, the one who have been given the loans are not paying them timely, the mortgages loan and the loans itself, they're not paying them timely. So that's why it's increasing. It's increasing, but it's not reaching the industrial average. So it's increasing at a lower rate, but it's not surpassing the industrial average to say that maybe it's at a worse position.
So maybe I can expound on it.
Please
concerning the decrease of 10.89% on the return on average assets. So from a secondary source, we found out that an increase of 1% in non-performing loans leads to a decrease of 0.9% in the rate or return on average assets. Therefore, this means that although the non-performing loans increased, it really affected the return on average assets. Yeah, thank you.
Thank you.
Thank you very much for that, and all the best.
So thank you to the teams that have presented so far. We will have a 15-minute tea break and then proceed to have the other 6 teams present. So you can have a short break for 15 minutes.
Sorry about that. Please proceed. You are Team G? Okay, please proceed.
Okay, thank you. So my name is Ian, and with me here is a team of analysts. I have Wycliffe, I have Joel, and I have Joy. And we're here to do an investor presentation on Cooperative Bank. You're welcome. So I kickstart this presentation with a buy recommendation of a target price of 14.24 shillings. And this is our one financial year target price based on or against the current price of 12.60. That is as per 10th of February 2023. And this uprise is spearheaded by the factors which we'll talk about later on in this presentation, which are macroeconomic factors and some internal factors that are positive. Moving on to business description, Cooperative Bank is the largest bank in the largest cooperative bank in Africa with 15 million members. And this is a growing, agile, and resilient bank with showcasing a high level of operational efficiency. This is the third most profitable bank in Kenya, with the financial statement showing a profit after tax of 17.1 billion shillings. That is financial year 2021. It's also important for me to mention that Cooperative Bank is a dominant bank here in Kenya. This is a tier 1 bank. Moving on to regional presence, I'd like to suggest the fact that it's a dominant bank in Kenya, and also an extension to that, there is the Kingdom Bank subsidiary, which was acquired in 2020, and it's showing signs of profitability, and it's profitable at the moment too. Let me also mention the presence in South Sudan. That is the Cooperative Bank of South Sudan. We are all aware of the tragedies it went through in financial year 2020, 2021, but according to Q1 report of 2022, Cooperative Bank of South Sudan was already recording profits, which is a good thing. Now, let me invite the next presenter to enlighten the panel on industry overview and competitive positioning. Please, Joy.
Joy Terer is my name, and I will be presenting on industry overview and competitive positioning. Cooperative Bank is regulated by the Central Bank of Kenya. It's currently, as my colleague has said, it's the largest cooperative bank in Africa. And as at the third quarter of 2022, it had a profit before tax of 22.4 billion, which was a 38% increase from 2021, which was 16.5 billion. It has a unique banking model as well as strategies addressing economical issues that are being faced in Kenya. It is a dominant provider of financial solutions, especially to SACCOs, as you all know, and it improves its efficiency through digitization and innovation as well. It uses the Project 3C.
Please have the microphone closer.
Oh, okay,
yes, thanks.
Sorry. It uses the Project 3C, which is the connect, cure, and collect, which is driven by the motive to decentralize the loan portfolio. The competitive positioning was analyzed by the Porter's 5 forces model, which we are able to see that in the banking industry, there are very many competitors as well as suppliers of the same services. So it has a high competitive rivalry. It has a high threat of substitution as well as a low supplier power. And due to the high number of buyers, the buyer power becomes low, and the threat of entry into the market, into the banking industry is very low because there are very strict guidelines by the central bank. I will invite Joel to take us through the environmental, social, and governance.
Thank you. So on the environmental, social, and governance of the bank is doing quite well when it comes to this part of environmental, social, and governance. Now we found that on the part of the environment, the bank is promoting environment healthy by using eco-friendly business method, financial instrument services, and initiatives. And on the social part, the bank is also doing quite well, as it is contributing to equitable economy results through the commercial the ventures of the bank. Also, it's indulging in philanthropic endeavors, whereby the bank, example of that is the bank offers sponsorship to very many needy, bright students in their communities. Also, the supply chain management and personal and local communities. On the governance side of it, the bank has a well-diversified progressive governance and very skillful with over 30 years experience CEO, and that's a good thing. And also compliance to reporting disclosures. Now let me invite the next presenter to continue.
Thank you, Joel. Time being of the essence, let me move to investment summary. And here again, we reiterate our buy target of 14.24 shillings. That's a 13% uprise. And these are the following. This is how we support that notion. One, the Kingdom Bank. The Kingdom Bank subsidiary here in Kenya is quite, performing well, and we are seeing some, promising profitabilities on it. The Corp Bank of South Sudan, again, there were some issues, but right now there is some stability, and we expect with a stable economic performance and political, again, environment in South Sudan, it will continue to do quite well. We have the project Kilele, which is majorly a credit risk assessment project that is aimed at minimizing credit risk and reducing that threat of the bank being affected by credit risks. Also, the stable economic environment which the bank is operating in Kenya right now. There were a lot of uncertainties last year because of elections and everything, but right now the economy, we expect some sort of stability in the economy. I'll kick forward to financial analysis, and here we had some, assumptions whereby we were projecting the Kenyan economy to grow in this year at a fast rate, the GDP to, again grow, and again political stability. Moving on, we were projecting an increase in an improvement in non-performing loan book to 11.5% against the 14.4% as per financial year 2021. Improvement in quality of asset book. This bank, as per 2021, they had asset base of 622.1 billion shillings, which is quite good. On capital adequacy, the bank, we are again projecting an improvement with that 10%. On operational efficiency, based on the Soaring Eagle initiative, which is majorly digitization of the bank's operations, we again expect some improvement in operational efficiency. On return on equity, again, we are projecting an improvement to 22% from 17.6%, majorly because of rise in, there's a trend of rise in profit. There's a trajectory of rise in profits. And basically, this is the, the majorly all we are talking about in one page. I'll invite Wycliffe, please.
Okay, on the valuation, we used two methods, that is the multiple valuation, and where we specifically dealt with the life cycle specifics. We also used the comparative analysis to come up with the same. On multiple analysis, we had an intrinsic value of 14 shillings. That is after comparing with using the price to book value. The comparative analysis gave us a value of 14.48 shillings, which we came up with a final share price of 14.24, weighting the multiple valuation, because we are evaluating the company or the financial metrics of the cooperative bank, while the comparative valuation is comparing a cooperative bank with its peers. I will invite Joel to take us through investment summary.
Now, on the investment summary of the bank, and we noted some key risk that the bank is prone to, and so these are risk: valuation risk, credit risk, operation risk, and exchange rate risk. Now, let's start from valuation risk. And out of 5,000 simulation, 78.5% posted a share price above 13.5. And and also on the credit risk, with the current economic crisis, there can be an increase in non-performing loans. So that's a risk. And exchange rate risk, the current exchange rate risk of sharing of shilling against the dollar is every day depreciating. And on the operation risk, and now, given the current economic challenges that we are facing, now the many other businesses are facing, we found that the Coop Bank also will face such things. And also on the investment risk matrix, we gave on the acceptable part of it, or little or no effect, we have these two risks, operational risk and valuation.
Thank you. I guess time bad, so I'll open it up to the judges' questions.
There's a slide where you had indicated some of the risks that the bank faces, and one of them was the exchange risk. And I think, yes, go back, please. So the Kenya shilling has been depreciating significantly in the previous year and also in the current financial year. And I note that you have put the risk as tolerable and probable. With the current macroeconomic factors, how do you project this risk will affect the bank? And how is the bank prepared for it?
Pardon, please, the question?
We have the risk of exchange rate, right? Okay. And the Kenya shilling has been depreciating against the hard currencies, but we can just talk about the dollar because that is what you have indicated on your slide, yeah? We expect that this is going to continue for some time. How is this going to affect the bank? Because how it affects it is going to affect the valuation, right? So I would like to know how you looked at that risk.
Okay. Now, the exchange rate risk, and then how it will affect the bank. Is that the question? Okay. We all know that if the shilling continues to depreciate against the dollar, now the bank will face some sort of difficulties. Now when it comes to changing the shilling to the dollar, and it will affect the economy at large.
In addition to that, Cooperative Bank also has diaspora customers, which actually goes to more than 20,000 of them, who convert the dollars to Kenyan shillings. Therefore, the bank will be losing more Kenyan shillings against the dollar.
Of the investment risks that you cited, where do you place cyber security amongst these?
In the matrix, or? Okay. With the current system that the bank have put in place, the cyber crimes have been less or minimal, though the gurus of the IT gurus maybe could come up with new ways of dealing with the bank, but so far the ones that we noticed is that Cooperative Bank is not actually affected so much by the cyber attack. Therefore, I think we can just put it in the tolerable.
Please go back to the previous slide you've just shown, this one, the investment risk. Out of 5,000 simulations, 78.5% posted a share price above 13.8. Who ran the simulations?
Okay. We did the valuations as in, okay, the way we worked as a group, each and everyone was to work at their own valuations, and then we would agree on the final one that we are going to have it in the report. So most of the reports, as in most of the prices that we got from the groups, ranged from as in above 13.8. That is what we indicated.
My question is on the 5,000 simulations.
Yes.
Did you do 5,000 simulations?
I think it's an error. It should have been 500.
You did 500 simulations?
Yes, yes.
You did 500 valuations?
Yes.
Okay.
Just a quick question based on your presentation. Under industry overview and competitive positioning, there was something that was mentioned, Project 3C. Please clarify what that was. And then there was a mention as to how Project Kilele would improve credit risk, i.e. lower it, but I didn't quite get why that is the case. So maybe just speak to those two.
Am I audible? On the Project 3Cs, it's the connect, collect, and cure. This is an ongoing project that is used to drive the motive of depreciating the loan portfolio so that the credit risk isn't faced as much. And as per the Project Kilele initiative, it's a credit risk adaptation project that is ongoing, which is an innovative tool used by the cooperative bank to be able to manage the credit risk, as is said by Joel. Yes.
To add on that, on the Project Lele, how it's helping in risk mitigation, we find that Project Lele is an adaptation by the bank that it's trying really to scrutinize the risk one by one so that it lower it impact as much as possible before these risks that are very much prone to the bank. So that's how Project Kilele is doing and mitigating most of the risks.
To add on that, for Kilele, majorly these are it's extensive end-to-end assessment of risk. One of the major issues when it comes to credit risk, the major issue is matters of default. And for that, it's further assessment, further maybe screening, customer screening, checking the loan appetite, so that we have to be sure that if we are putting money on this thing, there is a possibility of that money coming back in terms of payment. So majorly when we talk about end-to-end assessment, is what we are saying basically is they are doing extensive assessment to really assure that if we put money on this investment, there is a possibility of that money not being defaulted and it will come back.
Okay, thanks. Just go to the valuation slide. The next one. Yeah, my question here is what informed the use of this particular universe of banks as your comparator?
Okay, the reason that prompted us to use the comparative analysis is we understand that we are in a harder economic times, and not only cooperative bank is facing challenges of the current economy. So we cannot actually compare cooperative bank alone yet. Yet the other banks are in the same economic environment. So what prompted us is we want to see also that during these economic times, how is KCB and the rest of the peers of cooperative doing?
On the Potter's 5 slide, please. Buyer power, low. The bank is operating in a competitive environment, right? Which means there are available substitutes, there are other banks. Kindly expound how we arrived at the conclusion that the buyer power is low.
Okay, thank you. So the buyer power is low, and we have said that there are a higher number of buyers, hence unlikely to influence the prices. Let us check at the number of customers. How many customers walk to Cooperative Bank?
You should guide us on that.
What I'm trying to say is that the high number of of customers, it means that if the fact that they're high, and if a customer walks to Coop Bank and maybe they are not satisfied with a thing or two, and they walk away, there is still a higher chance that another customer may walk in and be like, okay, I'm comfortable with this product or this service that Coop Bank is offering. So in that way, they cannot really influence whatever prices that are set by Coop Bank.
Okay, maybe to ask, who did you have in mind while looking at the buyer power?
Okay, let me try to answer you. When we talk about the buying power, we are assuming that we're in the stock exchange market. We're talking about Cooperative Bank, which is, we have said it is dominant in Kenya and it is just extended to South Sudan. Cooperative Bank in the NSE has its peers that are international. For example, Stanbic. Most of the buyers will opt to go for the international companies because of their, let's say because of their capital or, okay, let me, for lack of a better word, let me just use that the brand. It's a worldwide known brand. So most of the buyers are going to opt for the worldwide brand and leaving the dominant, as in the country dominant brand. Thank you.
Thank you.
Thank you, and all the best. Good morning. This is Group H. You can proceed.
Thank you. This is Group H. My name is Faith Bosire. Good morning to you all. This is Mercy, Kanana, Tajiri, and Howie. Proceeding to our valuation. So, Cooperative Bank was founded in 1966 and licensed in 1968. It is the largest cooperative and rated the third most performing in Kenya. We have it winning awards recently in the years and the profits increasing. It covers basically retail performances and giving loans, mortgages, among other activities. And Cooperative Bank has improved basically on the investment sector and insurances. The lending has projected gains over the years, and the bank has continuously increased. It was first mentioned in NSE in 2008, and in 2014, it began its sustainable growth development, and since then it has been able to project Sorry for that. I'm heading these are some of the subsidiaries that Cooperative Bank has. We have the bank divisions and the cooperative divisions, Kingdom Bank. So basically the unit divisions are also aiding the growth of Cooperative Bank in general. And proceeding to the investment summary, due to the continuous growth of the Cooperative Bank of Kenya, we were able to recommend a strong buy of 15.65 from the current price of 12.5, which is an upside of 25.7%. We did this because the revenue the bank is recording is forward projecting, so it is quite promising for investors to invest in Cooperative Bank. So that's why we recommend a strong buy of 15.65. Thank you. Now I invite Mercy to proceed.
I'll be taking you through environmental, social, and governance. Environmental responsibility. Cooperative Bank has partnered with International Finance Corporation, IFC, to support businesses taking part in climate-smart projects, renewable energy, and energy efficiency-related areas. It loaned out 12.6 billion to renewable energy, mortgages, yes. And then the social and economic responsibility. The corporate wellness plans for employees, because they have a circle like Ukulima Circle. They offer training employees to effectively treat with disability. They have 0.5% of their employees are people with disabilities. We go to corporate governance. The corporate governance values are founded on the pillars of responsibility, accountability, fairness, and transparency. The board is responsible for the code of conduct that guides the activities of the bank and everyone. The CEO is Dr. Gideon Murioki, who joined in 2001, and since he joined, there was an increase from a loss of 23 billion to a profit before tax of 22.6 billion recorded in 2021. Thank you.
On risk areas, Cooperative Bank has risk and the potential risk that associate with them, including the legal contractual, the credit risk, the liquidity and funding risk. We have the compliance and regulatory risk. Those are the risks associated with corporate bank. On risk areas and mitigation, ensuring that the group is comply with the regulations and practices. We have the current annual of business impact with the bank itself and its subsidiaries. Ensuring the stress testing framework is always updated. We have the cybersecurity assessment required to update, and ensuring that the staff, the employee are updated with risks that match and the current risk. And the establishment of color code risk hit, where you map it with the color so that you can route for prioritization of the same. Thank you.
Now, in the next segment, we know Cooperative Bank ranks in the top 3, so we decided to pick out a few key features and compare them and see how it ranks. For example, you can see that when it comes to transactions, profit per share, Cooperative ranks first. When it comes to average return on asset, it ranks first. When it comes to mobile transactions, it ranks in the bottom 3. And digital transactions, bottom 3. Customer deposits, it's the 3rd. Next slide. Now, the next slide shows not just Cooperative Bank's ranking, but it shows by how much the gap that exists between the top and the last. Like you can see, for example, when it comes to total asset growth, Cooperative registered the lowest growth, and by a very big margin. When it comes to mobile transactions, you can see that the first person had almost a digital transaction of almost 600%, while Cooperative Bank stagnates at around 90%.
I'm Kanan, and I'll be taking you through financial analysis of the Cooperative Bank. From our balance sheet, we can see that the total assets have increased from the 3rd quarter of 2022 of 2021, I mean, from 592 billion to 622.1 billion, and the total liabilities have increased from 497.5 billion to 520.9 billion. The total liabilities are as a result of the customer deposits, and the total assets are as a result of the increasing loan books in Cooperative Bank. And then we have the income statement, and from the income statement we can see that the profit after tax, it was 22.7 billion from 17.1 billion in 2021. The key takeaways are that the core earnings per share rose by almost double during the period, by 47.0%, from 1.7 shillings in the third quarter of 2021 to 2.7 shillings in the third quarter of 2022, and it surpassed the projection of 2.5 shillings. And then there has been an efficiency improved due to a decrease in the CIR, and the economic recovery led to an improved asset quality, in that the loans really increased because after the COVID-19 pandemic, the business flourished, and people were able to borrow loans from the bank.
In coming up with our valuations, we considered certain key ratios, one of them being the price to earnings ratio, which we determined currently for Cooperative Bank sits at 3.4 times, which is 1.2 times less than the industry average of 4.6. The price to tangible book value, we discovered Cooperative Bank currently sits at 0.7 times, which is 0.1 times less than the industry average. We considered the efficiency ratios, which we discovered that the cost to income ratio decreased by 6%, showing that there was an increased efficiency. We considered the the loan to deposit ratio, where we discovered that there was a 4.7% increase in loans to deposit ratios, because the rate at which loans increased was higher than the rate of deposits. And then finally, we considered the capital ratios, which currently shows that the core capital to risk-weighted assets indicates that Cooperative currently has a 15.7, which compares to 10.5 of the industry average, of the statutory requirement, sorry. That is what led us to give a buy recommendation of 15.65. Which is higher, which is at 25.7% higher than the current price of 12.45.
Thank you. So, questions from the judges?
I'd like to hear from you on the ESG, particularly the governance side of the bank, and a comment on how the board is composed, whether it's diversified, and your assessment of the level of independence.
The board of governance is diversified, and your second part of the question was?
How you assess them for independence?
Like a scorecard or something. I'd give them an independence rate of maybe 80%, because, yeah, I'd give them 80%.
Yes, because?
The board of directors is divided into divisions: the loan sector, the investment sector, among others. So you look at the operational of Cooperative Bank being expanded under the governance general of Muriuki, Dr. Muriuki, and as it branches into various categories, it makes it grow. And when you come to look at it further, there's the subsidiaries, and these are further divisions that also make it expand further and not only operate as one single unit. So yeah, that's why we're recommending that.
Let's go back to the slide where you have the valuation methods. Price to tangible book value. Why tangible?
In the course of doing our research, we discovered that that was the most commonly used. That is why we decided to pick on it.
Okay, and between the price to earnings and that price to tangible book value, which did you rely more heavily in your valuation?
We used both. When you're coming up with a valuation, you're going to need as much data as possible, I think. So that is why we considered the 5 ratios. There are 5.
Did you have a preference of?
Not really. We compared both relative valuation because it points out to whatever has been recorded. So you use whatever the cooperative bank recorded to do the valuation and come up with our recommendation. I do not think we did that. Yeah. We used, as mentioned earlier, relative valuation. We compared directly the book value and the earnings, and then we used the multiples to come up with a recommendation.
Which data sets did you rely on to conduct your financial analysis?
We used data from the central bank report and the cooperative report.
One of your slides had...
And site on investments, yeah.
To what extent did you utilize their analysis?
30%.
You utilized 30% of Saiton's analysis for your work?
It was 30, 40, something like that.
So to be clear, you utilized Saiton's output in preparation of your presentation?
Some of it.
Okay.
There was a slide I saw a mention of IFRS 9. Could you go back there?
Pardon?
There's a slide that I saw a mention of IFRS 9.
The last one. Mnyanye. This one.
Based on your analysis, how has IFRS 9 affected these ratios? Because you've stated each after adjusting in accordance with IFRS 9. So that adjustment, how was it?
What I can say is IFRS 9 was a standard we used after determining the capital ratios, and it reduced the current capital ratios we discovered from 13.2 to 12.1.
Thanks a lot, and all the best.
Thank you.
Good afternoon, ladies and gentlemen. Before you, it's Team I. From my right, Terry, Abdi, Alan, and Naomi. We are here to present our findings on the third largest bank in East Africa, Cooperative Bank. We issue a recommendation of buying with an upside ratio. We issue a recommendation of buying at 24.20 with a upside potential ratio of 30.20 as per the closing of the shares at on 25th of February at 12.50 shillings. I welcome Naomi.
So, I'll be taking you through what does COOP do. COOP offers both wholesome services in banking and retail services. It also allows customers to invest, risk, and borrow and save money. However, on the ESG part, that's environmental, social, and governance. On the environment, it involves the carbon print, solar panels installation, and it's liquid enough to solve and respond to anything that comes on the environment. And it also considers cleanliness and everything that involves the environment. On the part of social, it has 4,000 to 4,500 employees, in which 46% of them are females, and 54% are male. On the governance part, it has a successful and an excellent corporate governance that's led by CEO, Mr. Gideon Murioke, and yeah.
I'll take you through investment risk and financial risk. And investment risk and financial risk, it includes market risk, operation risk, inflation, taxation, and regulation. And also, I'll go through SWOT analysis and Porter's theory. In the SWOT analysis, the strength is there is adaptation of technology, and the weakness, it is competition from other banks, and the opportunity, it's that it has a steady growth, that is, there's increase of customers. And in the threat, there's a cybercrime. In the Porter's theory, I'll go through, there's a
new customers and the threats of substitute from other banks, and also the bargaining power of customers.
We move on to valuation. While conducting valuation, we're going to be using key valuation metric system, which involves use of the price to earning ratios. We begin by the market capitalization, which stands at 74.2 billion shillings, Kenya shillings, while their earnings stand at 22.20 billion shillings. Under the price to earning ratios, we have a few subtopics. Price to earning ratio versus the cooperative bank peers. The average stands at 4.6 times, while cooperative price to earning ratio stands at 3.3 times. Price to earning ratio against their industry, cooperative bank still stands at 3.3 times, while the industry average stands at 5.7 times. The share price against the fair value, the current price stands at 12.65 million Kenya shillings, while the fair value stands at 2.4 million Kenya shillings. The dividend yield is estimated, they receive a payout of 35%, while they retain 75% of their earnings, which is projected in the next 3 years to still remain the same.
Okay, good afternoon, ladies and gentlemen. My name is Abdi. I'll be taking you through financial analysis. Okay. The profits for the year, the net sales for the year 2018 were 43 billion, 2019 were 48 billion, and 2020, 53 billion, 2021, 64 billion, and 2022, 67 billion. But the year 2022, the sales went down due to the COVID scourge, which affected almost all organizations. Capital investments, which also equals to return on capital investments and equity, it is positive since 2020. It has been growing at a rate of 9.7%, which is constant. The earnings per share, the share price is selling at 12.97, which is above the fair value. The financial position analysis. The assets, long-term and other assets, amounted to 5.91 billion. That's 591 billion for year 2022. For the year 2021, it was 540 billion, and for the year 2020, it was 496 billion. The liabilities and equities also added up to 591 billion, but it has low-risk liabilities. The past analysis on return on assets, it is above the market rate, which is considered great. Return on capital employed, which has been managed properly and is favorable. The forecast. Earning and revenue growth. The earning and revenue growth for cooperative society, it is required to grow at the rate of 9.6%, which will also be constant. Forecast for annual earning growth. There was insufficient data to show the forecast. Okay, thank you.
your valuation, you use the price to earnings, right?
Yes.
What gives you comfort in using price to earnings? I'll give you context to this question.
Okay.
This comes from an understanding that earnings is a financial, it's a number from the financial statements, right?
Yes.
And there are assumptions that are involved. So what gives you comfort in using such a number instead of maybe cash flow?
Yeah, we used discounted cash flow to come up with the forecast, the model.
I think you mentioned that you use price to earnings and not cash flows.
In what? Come again, please.
In valuation, you used price to earnings.
In valuation?
Yes.
Yeah, we used price to earnings.
So what gave you comfort in the earnings number?
In the earnings number, since the price is regulated by the government, it's
It's a ratio of price to earnings, right?
yes.
So the earnings, it's a number that you get from the income statement all the way down there. And before revenue ends, there's the revenue and all of the expenses. And there's some assumptions that take place there. So what gave you comfort in the earnings number that you used in the analysis?
What gave us comfort?
Yes, that you're confident it's an accurate number.
Yeah, since it has been constant since 2020. Yeah, for the year 2021 it has been constant. For the year 2022 it's constant, and we hope so. We hope that by the end of this year 2023 it will be constant also. Welcome.
Maybe you can share your insights on how Jamii Bora or Kingdom has added value to the bank.
Under the acquisition, they acquired Jamii Bora Bank, and then they converted it to be the Kingdom Bank, which they control about 90% of it.
Has it been a good investment for them?
Yeah, sure, it is a good investment, because if you look at the there, the Kingdom Bank, it gives the 45%.
What does it give, 45%?
They contribute to their outcome 45% of the total.
The value of the bank?
Yes?
45% of the bank is coming from Kingdom.
Cooperative Bank controls about 90% of Kingdom Bank, which Kingdom Bank gives an outcome of the profits 45%.
Okay, the profits.
Yes.
I get you.
Thank you.
Okay. Thank you very much, and all the best.
Ladies and gentlemen, good afternoon. It's Team J. I'm Ann Boro. On my left side, I have Edwin, Simon, and Joelyn, and we are here to present the third largest bank in East Africa, that is Cooperative Bank of Kenya. Welcome. We issue a buy recommendation of 16 Kenyan shillings with an upside potential of 27.5% as per 24th February 2023. From our recommendation, we computed the following: market cap at 73.63 billion, outstanding shares at 5.87 billion, free float at 1.92 billion, P at 3.56, earning per share is at 3.53, beta at 1.1049. To attain our target price, it will be facilitated by the following. Cooperative Bank of Kenya has used the latest technology, frequent advertisements, wide customer base, revenue diversification, and also it has a strong governance structure. On our investment summary, Cooperative Bank of Kenya has a higher performance which enable them to generate their revenue. It has also a unique position to leverage on technology which results to higher revenues. Capitalization on stability to higher pricing potential. Onto the business description, Cooperative Bank of Kenya, it is present in 2 countries, that is South Sudan and Kenya. It is also the third largest bank with lender to asset by, its asset is 579.8 billion. On the business segments of the Cooperative Bank of Kenya, Cooperative Bank of Kenya major in 3 business segments, that is wholesale banking, retail banking, and other group functions. On the wholesale banking, Cooperative Bank has the largest share of 52%, which, for example, of the wholesale banking, it is the customers, the investments, government, and more so. On the retail banking, that is the individual customers' activities, such as individual investments, and more so. On the other group functions, those are the services that the bank provides, which are non-wholesale, and they are not retail. Yeah, I will now hand over the mic to my colleague to continue with the rest of the representation.
I will now guide you through the ESG, whereby we computed that there is a 50% increase in green lending, that is from the year 2020 to 2021. There is also, in the social structure, there is 75% employees below 40 years, 0.5 employees are people with disability. Then on governance, corporate governance scorecard, we ranked it at 93% out of 100. It has also a well-board scale set. On the financial analysis, we used the trend analysis from 2018 to 2021. We also computed the earnings per share, whereby there was a decline from 2021 to 2022. There was a decline in earnings per share from 2.85 to 1.99 due to a decrease in the common stock. On the next, I will invite my colleague to take you through the financial analysis.
Okay, thank you very much. There's nothing sweet like being in a cooperative bank. You see, our earnings per share, as you can see, I am going to take you through the financial ratios. The liquidity level of Cooperative Bank from 2018 to 2022. There's been an increase, and that is very good. You know, that's what we love about trend analysis, because it is consistent and it follows that way. Debt to equity ratio. From 2018 to 2022, there was an increase, apart from 2020 to 2021, which we can say it was really affected by COVID, but not only COVID. You know, the government, they gave, they were mwananchi, the common mwananchi. They were not supposed to pay some amount in their transactions. So that will amount to what happened there. Our asset value was 579.8 B. I know you're asking yourself how we arrived there. So some of the ways that you can come up with your asset valuation is the capital asset pricing model, if you're familiar with that. It deals with the beta factor, the risk-free rate, and we were using the CBK, risk-free rate and the beta factor. Now, on our return on equity, from 2018 to 2022, there has been an increase. Which bank can you be if it's not Cooperative Bank? Okay, let me introduce my other member to take you through something.
I'm going to take you through the investment risk. So the first risk that we have is the credit risk, where in Cooperative Bank, the issue that we have the most is the non-performing loans, where you find that the customers do not pay their loans in due time, and we have the arrears. We also have the operational risks, where we have the digital system failures, which may be prevented, but some of them are not prevented. And there is the issue of data privacy, where the data privacy, in case of hackers by people, then the customer's data may be leaked to unauthorized persons. Sorry. And there's also the digital disruptive, i.e. the fintech technologies, where these fintech technologies, they offer better services to the customers in terms of loans that they give at a better rate than the banks, the Cooperative Bank. That is a risk because most of the customers will opt to go to the fintech technologies such as M-Shwari, M-Pesa. That is an issue for Cooperative Bank. And also for the competitive advantage of Cooperative Bank. Cooperative Bank offers better services to other customers, to their customers as compared to other banks. That's why it's mainly preferred by the customers over other banks. There's also Cooperative Bank also has advantages by having it is based in most parts of the country. It is diversified. That in most counties, you will not have to walk many miles without having a Cooperative Bank branch. That's why it is favorable to most of the customers. And it also has it also has, how do I put this? Their employees, they have an effective workforce. So if you have an effective workforce, then you are able to give effective services to your customers. Yeah. Anyone? Thank you. That is our presentation.
Thank you. We'll open it to Q&A because of time. I think we'll do 3 questions.
What valuation method did you use?
We valued through the trend analysis for the historical period from 2018 to 2022.
Just go to the slide on calculations. This slide, just it was like the second slide.
The second one?
One of the earlier ones, basically. Yeah, that one.
Yeah, okay.
Please explain to us how you established the market cap figure.
This was through the CBK report for 2021. For the price to equity ratio, it's the same. Beta 1.1049, it's from the CBK report as per 2021.
And that was the latest market cap, 73.63 billion Kenya shillings.
Just to clarify, you were very passionate on going through the ratios.
Yes.
One of the ratios was the debt to equity ratio. And it has been increasing over the years, right? If you can go to that slide.
Okay.
Is that a good or bad thing for cooperative bank?
On the side of the bank, when cooperative bank offers debt, when debt increases, it values the bank. When equity increases, when the shareholders, it's one of the five objectives of any company, shareholder maximization. When the shareholders increase, that is a good benefit for the company. It was very good for the company.
Thank you. And that will be it. And all the best.
Thank you.
Thank you. Okay, my name is Jones Makemo. I'm here to represent Team K on our report on Cooperative Bank of Kenya. I have my teammates Dennis Mwiti, Sharon Akini, and Baraza. I'll take you through the brief part of cooperative. Cooperative Bank of Kenya Limited is an incorporated bank under Company Act, and it's issued a license to act the business of banking under the Banking Act. I'll take you through the investment summary, whereby we put our target at 17 shillings with an upside interest of 36%. I'll take you also through the business description, whereby Cooperative Bank of Kenya issues four main services. That is the personal banking, business banking, and also the consultancy and loan services to our shareholders. I'll take you also through the history management of cooperative. Cooperative was initially a cooperative society in the year 1966, and it was officially given its license in the year 1968. And in 1977, it was officially started as a commercial bank, and it relocated in the year 1998 due to the U.S. Embassy bomb blast. And I'll finish up with the business segments and technologies, whereby this includes that in the aspect of technologies, the bank has really helped out in that people are able to maneuver in their accounts easily through the technologies of the business. And also on the summary of the subsidiary, we have the Kingdom Securities Limited, the Cooperative Trust Investment Services, and also the COP Consultancy Insurance Agency. I'll welcome my team member to take you through the other part.
In the industry overview and competitive positioning, comparable selection, every bank in Kenya offers almost all the services that are offered by Cooperative Bank of Kenya. Yeah, and this makes it hard for Cooperative Bank to compete in terms of the number of services. Yeah, but this quality of services offered by the Cooperative Bank of Kenya puts it on another level. Yeah, Cooperative Bank of Kenya comes at the third position after the Kenya Commercial Bank and the Equity Bank, yeah, because of their competitive advantage of the international customers. Yeah. Next, I'm going to go to the market dynamics and acquisitions. The Cooperative Bank of Kenya was started in the year 1966 with the starting capital of 255,000 Kenyan shillings. Yeah, and a loan from the government of 214,000 Kenyan shillings. Thereafter, it's been growing. It reached a point where it registered a financing company to manage its finances, yeah, until eventually it came to be fully fledged as a commercial bank. Yeah. Due to the COVID-19 pandemic, there was it brought a negative impact to the Cooperative Bank in that there was a rise in the NPLs, the non-performing loans, since the salary and the revenue of households and businesses, it reduced or it dropped down. But due to this, Cooperative Bank lost its third position to NCBA Bank, yeah, but it regained the position by paying the biggest dividend payout of 5.8 billion in the year 2021. Lastly, industry overview. The industry, we learned that modern industry, it began in Italy in the 14th century, and thereafter there's been changes, yeah, in new technology and new banking regulations. Yeah, the industries now are very competitive with the banks offering a variety of products, yeah, and services. Yeah, and the industry successes of the banking sector is that they are innovative, they keep on changing things, bringing in new stuffs, yeah, and they adapt to changes, yeah, and provide financial stability and security to its consumers.
In our valuation, you can see the Cooperative Bank profits after tax increased in the year 2022 by 47.0%. It increased by 42.0% to a value of 71.0 billion. Due to this increase, in spite the positive results, the group's board of directors did not increase the interim dividend. Also increased in that year due to the high increase in the profits after tax. Then the financial analysis. During the COVID-19, every business was affected, so COP was also affected. So they needed to find other means of maintaining their customers. So Cooperative Bank decided to introduce the digital channels. The digital channels reduced the number of customers who came physically to the bank to 6%. But that also helped COP Bank because there was cost control and also cost reduction. So the business still was booming. So that's why we're still recommending that you buy in Cooperative Bank, because even during pandemic, the bank finds means to make sure that the business still continues and every customer is at good.
Yes, okay, so I'm going to take you through the investment risks. There are about 7 investment risks, which include market, operational, concentration, systemic, strategic, legal, and contractual. So
The market risks like the mature gap, position restrictions, these are risks that every bank goes through. But then the goodness with cooperative bank is much as there are these risks, there are ways in which they can mitigate them. This appendix will show you, the middle is back. The middle, they are the risks and how they can affect the bank, and then on the far right, on the far left, it's how the bank tries to mitigate them. So the bank tries to mitigate these risks by assessing themselves inside, and then they have a strategic team which does the analysis and forecasts, and so even if there are these risks, they can mitigate them in some way or another, and that's why we can say that if you buy a share from this bank, then these risks are very low and you are most likely to earn a good profit when it comes to another year or the end of a financial year. And then there is the ESG, environmental, social, and governance. If you see the policy that is written in the policy that cooperative group have, they go towards sustainable development in a way that they follow the environmental laws, and they also follow the social norms that are in a market or in a segment, and they are also good with governance, and their governance is the one that is making them, their internal governance is the one that is making them to go heights. And then there is also the SWOT analysis, where you have the strength. Strength is that they focus on members. Weaknesses are like they lack professionals, and also most of their people are of older age. And then there is also opportunities of expansion beyond Kenya and forward. And then there are threats like competition from other banks like KCB and Equity, which have been in this industry for so long. So we recommend that you buy that share, and it will not be of a loss to you. Thank you.
Thank you very much. How did you determine the average age of the staff?
Average age of?
The staff.
Okay, we visit these banks, and we know that most of the people, from the board also, from those reports that are there in the internet, we did not have much time physically, although we did some things. But then from the board and the people who are given in that report that is on the portal or the website of the bank, most of the people are of older age and they have been there. And also most of the people who are leading the trustees, the banks that are there, they are of older age. No, they are not really the youth.
So what value, what's your estimate of the value of the price? You say that it's a good company and won't let us down, but what quantitative number can you put to that?
Okay, the value as per now is at 12.55 shillings, and our target price by the end of 2023 is at 17.05 shillings.
And how did you determine that value?
Okay, we used our market capital, and also we used the price per share of the recent years.
Also the trends that have been there, for example, the last year but one, the profit after tax increased by 59%, and the profit last year, the third quarter of 2022, profit after tax increased by 47%. So we recommend that you buy, because if the trend goes that way, it will hit 17.05.
Okay, thank you, and all the best.
Thank you.
Good afternoon, ladies and gentlemen. Below, in front of you, we have Group L. I'm Bridget McKenna.
I'm Shiwani Hadley.
Edwin Toya. I'm Derek Onsarigo.
And I'm Mary Mbogwa. To start us off, we're going to start with recommendation, where as a team we initiated a coverage of the Cooperative Bank of Kenya, where we are strongly buying it. And this is through our the cooperative current share of 12.5, the projected share of 16.3. So we recommend a strong buy on Cooperative Bank of Kenya, guided by the fair value. And also we projected that the Cooperative Bank has an upside potential of 30.4% based on the current price, which is 12.5. So we expect that the current dividend, which we have that is 1 shillings, we maintain it for the next 2 years, but even we anticipate that the dividend gets to be raised maybe for 1.20. Also, the cooperative has growth drivers. Some of them we have rejuvenated growth. We have some deposit growth despite the slow economic growth that we have. And so on to the next, we shall have the business description.
Okay, on to the business description. We have the Cooperative Bank of Kenya is under the sector of banking and finance, and it is incorporated under the Company Act and is licensed to do business under the Banking Act. We also have the bank running under 3 subsidiary companies. Number 1 being the Kingdom subsidiaries, which is a stockbroking firm. We also have the Cooperative Trust and Services Limited, which is in fund management subsidiary. And we have lastly the Cooperative Consultancy and Insurance Agency, which advisory and capacity building for the cooperative bank. We have the market segmentation where we have individuals where they have saving accounts, current accounts, loan accounts. We also have the business. We have business accounts, corporate loans, and merchants. We also have the specialized services for young people, women, and farmers. On to SWOT analysis. The SWOT analysis, we have the strengths, opportunities, weaknesses, and threats. For the strengths, we have the cooperative bank being one of the banks that runs most of the SACCOs in Kenya. All SACCOs are run under the cooperative bank. That makes it wide known and have a very clear base and a wide coverage. We have the weaknesses where we have it's not like in many countries as to say, so it does not have a lot of dividends from outside the country, but the one we have in Kenya is managing the finances well. We have the opportunities, we have the introduction of the golden halo and the personalized products for their customers. And lastly, we have threats. The threat may be to talk of when the government mandated the cooperative bank to handle the issue of hustler fund. As much as it's a threat, but they're managing it in having a SACCO which is able to get ways that they can monitor, trace, and make it sustainable. Moving on to financial analysis.
For our financial analysis, we measured on the profitability of the bank and the liquidity of the bank. So Cooperative Bank has been posting a positive trend of profitability in the banking industry. During the 3rd quarter of 2022, Cooperative Bank reported a profit before tax of 2.7 billion, which is a 38% increase over the 3rd quarter of 2021. Then for the liquidity, since 2015, Cooperative Bank has been focusing on the liquidity, whereby it's above 30%. And the liquidity ratio is a key component of cooperative business activities. So for the financial analysis, according to, for the investment summary, according to CBK 2018-2023 investment summary, the bank has had a strong track of profitability, whereby the customer base has grown to 200,000 new customers in the last 6 years. The bank has also been able to grow its profit from 2.9 billion in 2017 to 5.7 billion in 2018. Customer deposit grew to 28.2% from 87 billion in 2017 to 112 billion in 2018. The bank has also managed to reduce its performing loans from 11.3 billion in 2017 to 10.1 billion in 2018. So for evaluation, Derek will take us.
For the evaluation bit, we use the DDM method to evaluate the company. We also used comparative analysis. We also projected that the bank will grow at the rate of our terminal growth rate. We placed it at 10%. This is informed by the increase in net income, the revenue income, and the cash flow. That is by 8%, 7%, and 25% respectively. Also, there's been an increase on return on assets and return on equity by 2% and 9% respectively. Also, we attribute that that we recommend a strong buy because we believe that we attribute the growth of the bank, the terminal growth rate, to the way the bank has been able to manage credit, and also the performance of subsidiaries, the bank subsidiaries, and the way the bank has been able to reduce its costs on operations. Thank you.
I'll take you through the risk analysis. One, we have the operational risk. This occurs due to inadequate or insufficient systems, people, or processes. The bank tries to curb this risk by employing more people to curb the inadequate people, and it also tries to improve its software, and this way it will be able to curb the insufficient or the failing processes. Secondly, we have the the reputational risk. Here it's where people make, due to bad decisions, the bank gets to have a poor image out there, but the bank tries to curb this by having a good customer experience with the people that it relates with, the stakeholders, the customers, as well as the staff. We also have the market risk. This occurs due to the exposure to the interest rates and also to the changing market prices. But the government tries to ensure that their income as well as their capital is well maintained. Finally, I'll take you through the environmental, social, and governance policy. This policy, it was formed so as to offer sustainable development and to bring positive impacts into the environmental sector, the social sector, as well as the governance sector. The main objective with this is ESG policy. It's to comply with the government, with the laws that deal with these three sectors. One, in the environmental sector, it tries to reduce the waste management by using more software. This way, it will be able to reduce the usage of paper. Secondly, it also efficiently uses the energy and water that the bank facilities use. Secondly, in the social department, the bank tries to inform its staff as well as its customers in the financial information that it needs, so for their customers and for their people to grow financially. The bank also creates jobs for the staff and for other people and also for their customers. Then, thirdly, we have in the governance sector, where the cooperative bank, it enhances or upholds its ethics and integrity in what it does. And also, the bank also enhances the ESG policy. This way, it's able to curb the things that fail them in the three sectors: the environmental sector, the social sector, as well as the governance sector. For the conclusion, the investment summary has showed us that the bank has been growing financially, profitability. The bank has gained more customers. Personally, I'm a customer in the cooperative bank, and it has never failed me since 2019. And I testify that it has good services to offer. So if you invest in it, you're assured that in the part of the governance, it's well maintained. In the part of in the part of its software, it's highly technologized, and also the bank it also takes care of the customers. Yes, thank you.
I have a question on your SWOT analysis. One of the weaknesses that you cited was that the customers have low credibility. How did you make an assessment of their customers and determine that?
Pardon the question?
On your weaknesses, the second bullet point says that one of the weaknesses that the bank has is that they have low customer credibility, and some of your team members are customers of the bank. How do you reconcile that?
Okay, about that, it's majorly on some of the branches maybe, but as much as it is a weakness, the Cooperative Bank of Kenya has already tried as much as it can to get to their customers and try to solve the issue and be able to communicate and get feedback appropriately.
Still on the same slide under strength, maybe just elucidate a bit more on the first one there, controlled services. What exactly does that mean?
Thank you for the question. Concerning the control services, having that cooperative bank as the circle movement, so where circle comes in together, so that's one of the services that we more appreciate for it, that it has become a very positive impact to the most of the community and everyone using it. Thank you.
You gave us two ratios. There was a price to earn at 7.3 and price to book ratio at 1.4. How do these ratios compare to the industry? And also, what has been the company trend of the years? I don't think you've mentioned that.
On the company trend, in the investment summary, we saw that the bank has been growing. Its profitability has increased, and also the customers, comparing from 2018 going even to 2022, the number of customers have increased. Yes.
And how do the ratios compare to the industry ratios?
That is the weighted average, and therefore that is the weighted average, and so the ratio, the price to book ratio, and the
Would you like me to put it in different words?
yeah.
Okay, sorry if it's complex. We have a ratio of 7.3, that's price to earnings, right, for Cooperative Bank. What about other competitors? What are their ratios? How is the Cooperative Bank compared to them? Or even just the industry average?
The industry, the bank, comparing to other tier 1 banks, the industry average ranges from 1.0 to 1.4 for the PE, price to.
Okay, thank you.
Okay. Thank you for that, and all the best. So, to end of the last, what we're going to do is take another 5 to 10 minutes to collect, and then after that, the judges will announce which teams are proceeding to the next round, which is starting. 5 to 10 minutes. So, let's maybe take a short break and we do the collation. We'll be back in 5 minutes. So this is what's going to happen. We are going to announce the teams. I think Joyce will focus on the top 3. So we'll be announcing the top 3. Those top 3 will be going to that next round. The next round is going to be very brief. You're going to be given 5 minutes to do your presentation. We do not expect you to be running through the slides. We expect you to come and give us maybe 3 or so reasons of why you recommend what you recommend. And then we'll give another maybe 5 minutes for Q&A, and that will be it. So once you're announced and you're among the top 3, we'll give you maybe 3 minutes to step aside and prepare. And then I believe they'll need to be stepping out. Okay? So I'll be announcing this. I'll have the honor, in no particular order. I'll be announcing this, and then you take your 3 minutes. So we'll expect you here by 1:30. And then we expect that within the next 15 to 20 minutes, you should have been done with that round and ready to announce the final winner. Is that clear? Are all the teams here? Okay, so we'll expect you back in the next 5 minutes. So among the 3 teams, one of the teams is Team D. Where's Team D? You don't know your name? At least clap for yourselves. Are you excited or scared? Because I don't know which one is that. So one is Team D. The next is Team F. I don't know if I'm getting old. When I was young, we used to scream when that happens. But anyway, who am I? The next is Team E. So you're requested to take 5 minutes out, and then we'll be calling in the first team to present. Joyce, I believe the rest of the teams will need to stay out. Of the 3 teams, the 2 will need to stay out. So you'll need to be where you are before, and then you'll be called. So 5 minutes, then we'll be calling the first team. Are we calling in any particular order? Okay, so be prepared. We'll call whichever team. Congratulations for having made it to the last round. Your group?
This is Group E.
Group E?
Yes.
For egg?
Egg, yes.
Okay. So you're being given 5 minutes to present. We do not expect you to run through your slides because you'll not have the time.
Yeah.
And then if there are any questions, then we'll be able to ask you.
All right, sure thing.
Okay.
All right, can we start now?
Yes.
All right, great. Yeah, this is Group E, and we're back to reaffirm our buy recommendation on Cooperative Bank. And there are multiple reasons, as we've already shared, as to why Cooperative Bank is a good buy, but broadly categorizing them into 3 reasons. The first is the technology that it has incorporated. The second is the operation management. And the third is the sustainability of the bank. So we're going to just dive a bit deeper into those.
So the first one is the technology, and here we're going to talk about the 94% of their transactions being online. So with the shift from the traditional banking to the now digital platform, with a 94% of the transactions being online, this means that they're able to capture a lot of market. This is an untapped market in Kenya, especially. So Cooperative Bank is trying to compete with a lot of fintechs, such as Tala, that is a credit company. So with this in mind, this gives them a competitive edge in the market.
Yes, and now to talk about the operation aspect of the bank. We all know the main driver of revenue of the bank is interest, and interest comes from loans. The bank has done a really good job in managing its non-performing assets. So non-performing loans, we saw a 5% drop on the non-performing loans, and this basically points to very good risk management and also proper active portfolio management. As we saw, the portfolio is really diversified around different asset classes and clients.
Looking into the sustainability of the company, you are able to see a strong governance. They have been able to put in place a structure that provides both bottom-up and top-down view of the risk within their company and also the operations. And also we've seen from the awards that they have been able to win the Sustainable Financial Analyst Award. We also have the Environmental Report Award from ICPAC, so which means with Cooperative Bank, they've been able to handle the operations very well and it be sustainable now and also in the future.
Right, thank you very much. Just to conclude, so the numbers really made sense. The bank is really sustainable and it's actively managed well, so we recommend a strong buy. Thank you. We're welcome to any questions.
Thank you very much for that. Jesus, do you have any questions?
Is Cooperative Bank missing out on the regional opportunities that its peer banks are pursuing?
Yeah, we understand that Cooperative Bank is heavily invested in the Kenyan market, and we really feel like this is because they have understood the market. They have understood the cooperative societies who they serve, the circles who they serve. So it seems like a safe strategy to stay in the market, which they are already a dominant player in and understand very well. So we're not very worried about that.
And also to add on that, Cooperative Bank of Kenya opened a subsidiary in South Sudan. So although the market in South Sudan has been really unstable, they were able to pump in money last year to enable for the growth of South Sudan. Yeah. And they're also tapping into other markets such as Malawi. So yes, it's not really an issue.
Final question from me. What would you change in your valuation approach that you had done previously?
Could you please?
Yes, what would you change in your valuation approach? Basically, having gone through this and the experience you've had and the questions you've been given before, what would you change?
So for that, we would incorporate a Monte Carlo simulation to help incorporate the risk in the valuation of the... Yes. Can you hear me now? So we would incorporate a Monte Carlo simulation to help in incorporating risks so that we can give a more solid valuation.
Okay, thank you. I don't think we have any other question from the judges. Thank you for that, and all the best. afternoon. Are you ready?
Hello, ladies and gentlemen. This is Team F, and we will wish to show you how we came up with a fair value of 15.2, and therefore recommending a strongly buy for the Cooperative Bank share. Now, in our valuation, we decided to adopt the price to book model, the price to book strategy in coming up with the fair value. This is how we went about it. We looked at the outstanding shares of Coop Bank, which from their website was 5.8 billion, and we obtained the shareholders' funds average for the past 5 years, which was 88.35 billion. Here, we divided the shareholders' funds to the outstanding shares to come up with the book value of the Cooperative Bank, which was valued at 15.23%. We went further to determine the price to book of Cooperative Bank so that we can, maybe if you could project from the slide to the last. Okay. We wanted to determine the price to book for Cooperative Bank before we compare it to the multiples of the peer in the financial industry. So the price to book was obtained through dividing the current share price to the book value, which was 2.3 to 15.23, and then we found out that the price to book for Coop Bank was 0.8%. Now, when looking at the peers, it means that it's below average. Now, when you do the average for the peers, from Equity Bank to the Stanbic Bank, you will find that the average is 1.025. This means that Coop Bank is operating at a discount. And therefore, we wanted to find out at what price should Cooperative Bank trade in order to be at a fair market? Should it sell its shares to be so that we can say it's operating effectively? That is how we compared the 0.81 price to book value, which equates to 12.3 price per share, which we were using at the time it was trading. Now we were trying to find out how will it trade at 1.025 so that it can be at par with the financial market. While doing the value, we found out that it was 15.657, and therefore we recommend that the bank, this is the fair value, and it should be valued at this model. I will welcome the next presenter to expound much concerning the price to book model that we use to come up with the share price.
Yes, thank you. So the reason why we use the price to book ratio, it's because it provides a relatively stable metric that we can be able to compare it to the market share price. Also, another reason for our recommendation for a buy, it's because the dividend per share is 1 shilling, and it has been stable since 2018. This is able to create certainty to investors, and it's a super efficient reason for a buy. I would like to welcome the next presenter.
Our fair value was at 15.62, and the current price being at 12.30. We find that the shares are undervalued at the current market price. So that's why, being undervalued, we recommend a strong buy.
Okay, on another recommendation, factoring out the price to earning. The price to earning of Cooperative Bank over the past years has been very low at 3.3. What does this mean? This means that for every investor, he or she requires a payback period of 3.3 in order to realize his or her returns. Another factor, the price to earnings at 3.3, this implies that it's very low and it's very cheap, and the stock price will increase in future. As I conclude, I want three key issues, 3 key points on explaining the why Cooperative Bank is at a very healthy position. One, it has a very average NPL, a very average non-performing loans, and 2, it has a low cost of risk, and 3, it has a very high coverage ratio. This explains a healthy position of a bank. I like my...
Thank you. Maybe just to emphasize on how we came on the reason to strongly buy and not buy. Now, we have an investment rating which we obtained from various secondary sources. From here, you can see that they are rating that when the expected return, ER, is beyond 25%, then we can recommend a strongly buy. And when the expected return is between 20 and 25%, we can recommend a buy. When it ranges between 10 to 20%, we recommend a hold until a sell when the expected return is below, when expected return is below 10%. Now, moving to how we found out the expected return, we found the change in the share price. That is, if the cooperative bank is operating at the required level of 15.6%, and then we look at the current trading, which was 12.3%. Now, when you find the difference and you divide it with the current share price, you will find the expected return of 26.9%. Thank you.
I have a question. You said that you cite cooperative banks' cost of risk as being very low. Could you speak to us about their provisioning practices relative to other banks?
Okay, on the cost of risk, one factor, we are able to see that Cooperative Bank has been able to hedge itself against unexpected losses. And 2, with the implementation of the credit risk management practices, Cooperative Bank is able to control its credit risk.
So does Cooperative Bank, how does it fare in terms of the provisions that it makes for bad loans as compared to peers in the industry? Does it do well, or how does it fare?
Okay, the provision, definitely I talked about a high coverage ratio, whereby cooperative is able to, the provisions for bad debts, able to increase the provision to bad debts in order to cater for the risk from the credit risk. Invite my friend maybe to expound.
So how do you expect that to evolve in the current very difficult economic environment?
How we expect it to evolve. So, while looking at the current environment, we're actually recovering from the COVID-19 pandemic. Also, the political shock is actually coming to an end. So this means that the market is going to be stable enough to sustain the performance and the growth level that we recommend for the Coop Bank share.
Thank you. From the slide that is currently on the screen, price to book ratio of Cooperative Bank, that's 14.9, right? Yeah?
No, the price to book ratio is 15.62.
I think it's the other way around.
So let me just clarify that.
Mm-hmm.
So from the Coop Bank, now the value 15.62 and 14.9 are the share prices that we obtained from calculation. So from here, we don't have the price to B and price P to E for Coop Bank. We calculated it, and I've just explained that we got the value of 0.8, and that's how we compared it to the multiples of the banks that are at the financial sector, at the NSE.
Okay, so the 15.6 and 14.9, those are share prices.
Those are the share prices by using
Oh.
two ways.
Oh, okay, then maybe that's something that maybe should be amended, because as is, it shows the price to book is 14.9 in terms of alignment, which would mean the shares are very overvalued. But then right next to it, you indicate the shares are undervalued, where the price is below the valuation. But thank you for the clarification.
Okay, I believe there's no other question. Thank you very much, and all the best. Santeni. So we'll have the final team, then the judges will collect the results. This is Team D?
Team D, yes.
Okay. You have 5 minutes, please go ahead.
Okay, I'd like to introduce my members again. Felix, Sonia, Tonya, and Vanessa. We are here to reiterate our buy recommendation of a 12-month price target of 14.68, representing a 16% upside based on the close of yesterday of 12.6. This is based on 3 key ratios, 3 informations, which is the stability of the stock price. Here we try to emphasize the 8% dividend yield consistently, even during the pandemic. Secondly, we focus on the low operating costs relative to the income. This is based on the Q3 announcement of the 47% increase in income, whereas only a 26% increase in costs. And finally, we do the Soaring Eagle Transformation Initiative, which my friend here, Sonia, will take you through.
Okay, so the Soaring Eagle Transformation Initiative has had various key achievements, but we'd like to focus on 2 main ones, which is the reduction of the bank's non-performing loans and data analytics, which has led to the credit risk analysis being made more advanced. And that way, we're also able to see, due to the 94% of the bank's transactions moving to alternative channels. I'll hand it over now to Vanessa to take us through a few more pointers.
Thank you, Sonia. That was very nice. Now, just to add on to what she has said, we know, or from our research, more than 60% of the company is owned by SACCOs locally. And then this same company has gone back to give these people and these groups, these individuals, education on the same, just to improve their financial wellness and health. Yeah. And then finally, we can say that the society hasn't gone without recognizing it, because the same company has earned awards for their good effort. For example, the Sustainability Award in 2021, which again can be seen in how they have changed their operations from manual to digital. And also the Gender Equality Award, where we can see the company is made of 54% women and 52% women and 48% men. Thank you. Oh, sorry, let me introduce Felix. Thank you.
Just to add on all that they have said, it's good to mention that the bank has maintained a healthy payout ratio, of 43.6% over the past 5 years, which is a plus for any investor that likes earning income, passive income from their investments. This is a plus, and that's one of the key aspects that should inform an investor into buying into this stock. And also, it's good to note that the payout ratio is likely to increase if we experience a good economic times in the future, which we do expect. And that's all for today, and thank you very much.
Where are you going?
the CEO has been at the helm for how many years? Since 2001? Since 2001.
Yeah.
How do you size that up in terms of good governance? And is that best practice?
It's actually, it shows he has gained, been there for long. Can be said to have given him the experience he needs to drive the company to where it needs to be. He has seen the company through was it the terrorist attack that happened in 2001 and he has helped it grow to where it is right now. And we can also note that he won an award not so far ago, 2001 I think, showing that he's still, as much as he has been there for long, he's still doing a good job, and there's no need to change governance if the right thing is being done, if he's doing a good job.
We all appreciate the bank's involvement in the Hustler Fund. But from your analysis, do you think the Hustler Fund will cannibalize some of the bank's like clients or something like that?
Yes, we understand that as a possibility. We did look at risks, and one of the risks we looked at was geopolitical. Beyond policies, we looked at the consideration of the Hustler Fund, being that it could eat on their interest income. But seeing the factor of their contribution on how they are helping the SACCOs, and the SACCOs will technically be banking with Cooperative Bank, even though the interest from the debt would go out, the deposits would still go up in our analysis.
Do you think the regulatory environment here is enabling for Cooperative Bank to do well, or how do you view the regulation here?
Being that the current government was just elected recently, we cannot give a definitive answer on that. But looking at the direction they're going, which they're looking to raise revenue from taxes and other things, we estimate that also to be another factor in the geopolitical risk.
And then, thanks for that. In your conclusion, I think you mentioned that good economic performance is expected going forward. I'm just curious, on what basis do you make that observation?
Said if, okay, I don't know if I said if, but we are all hoping for better economic times. It's not for sure that we are heading into better times, but I'm sure we all hope that all will be well in the few years to come. It's hopeful thinking.
Okay. So many questions, but I think we'll close at that. So thank you for that. The judges will take around 3 minutes to collect, and all the best. Asanteni. Hello. So we are almost at the tail end of it. And first say again, thank you for being patient. I'm sure most of you are very hungry. I hope you're not hungry. We finished the final collation of the results, and we'd wish to announce it. So maybe I'll just wish to call the judges on the stage. They don't mind. They'll say 15 seconds something, then we can announce whoever is the ultimate winner. I'm seeing there are some awards there. Then Joyce will be able to tell us how to do the awarding. Yeah. So these are your judges. I hope they didn't give you a whole lot of pain and more joy. As I said earlier, my name is Francis Nasiomba. I think for me, the feedback would be, do your homework. For me, just say that. Just do your homework. The more you do your homework, the more, even when a question is asked, you know what is required. But most importantly, when you're told to present 1+1, maybe sometimes it's good to do a research about where the 1+1 is coming from. So a history would have helped for you to understand the bank and the industry also. But we'll go around.
Thanks, Francis. My name is Maina Washieni. It's been a pleasure to be a judge here today. Thank you all for your presentations. I will just make maybe 2 brief remarks, food for going forward. You know, for every presentation you make a slide or slides about, you want to take a step back and ask yourselves, you know, what am I trying to say? What are the key takeaways from this particular slide, right? If that element is not clear to you, then it's not probably going to be clear to the people you're presenting to, right? So have that in mind, especially in a competition like this where time is of the essence. So the hit factor for every slide is important, right? Where can you minimize on things that people already know, right? People know that you're reviewing this particular bank, so you don't need to maybe waste time telling people it's cooperative bank. Take it for granted. Your slide already shows that. Get into the fundamentals of whatever it is you're trying to present immediately. Francis mentioned about history. For history, you need to pick the key things. One of the things you probably don't need to mention, because A, it's one of those things that you can also take for granted, B, people are not necessarily going to remember, is when the institution was incorporated or that it's licensed. Take it for granted that, yes, it would not be operational if these things were not in play. So what are the key things you'd want to tell somebody who has never heard about a cooperative bank, who doesn't care that it was licensed in 1965, who might not be Kenyan when you go and present out there? Again, what are the key things that you're trying to get to and get to quickly? Thirdly, metrics are important. For a lot of you, when you are doing your ESG slides, they were very heavy on the narrative, not so much on the metrics, right? So in terms of things like the social impact, you know, how many people have they employed? You know, is there a target? These are things that should have been in your research. So you can say, you know, if their target was 16,000 people in 3 years, they are 40% of the way there, right? This is how you make those figures real, as opposed to, you know, just having a narrative which is great, but also not necessarily speaking to what's happening. On that as well, you want to just take some time to understand, again, you know, at the end of the day, the valuation aspect of this is very important. The weighting is actually quite high. So you want to time your input such that you can spend some time on that particular aspect. Be very clear on the key things you want to emphasize about your valuations. Your assumptions need to be, you know, very clearly outlined. I think there's a presentation where, you know, somebody wrote there, and other assumptions. You know, people will grill you on those. What other assumptions are those, right? So just think about those things. We'll share more insights later, but I think, you know, good trial for everybody.
Thank you, Maina and Francis. I think Maina literally read my mind, but I will not lack something to say. Sorry, I missed to introduce myself. My name is Brenda Mochomba. What I would like to say is please carry your heart to work. I wish you could be able to view yourself as you do the presentation. Maybe next time as you prepare, present in front of a very large mirror or record yourself and watch it. You will be able to tell if you yourself are convinced about what you're presenting, because if you're not convinced, you will not be able to convince the judges or the audience, or in a real case scenario, the investors who are supposed to either buy, sell, or hold. So you really need to be convinced as a person. Kindly do your research. We were talking about the financial institutions sector. There is loads and loads of information about this sector, and it is readily available. Readily available. You don't have to struggle with this. So please, do your homework, do it right, and put your heart to work. Otherwise, I would like to appreciate each and every one of you for taking your time to prepare for this research challenge. Next year, the other years to come, and in your careers, do better and thrive. Thank you.
So thank you, team. My name is Fantas Maina. First, I'm happy to be here, and thank you all for participating and good effort. I think most of the team members have issued their comments, and I do agree with most of them. I think mine will be on the logic as you make the presentation, starting out with the key takeouts or the theme of the presentation, and also concluding with the same theme. Thank you.
So thanks to my fellow judges, and good afternoon. My name is Richard Mureithi, and I work in the investment industry. I've been working there for several years now, and I've witnessed the change in the standards that are required of financial analysts. I look at the world as it is today and how it was when the CFA Institute was established, and the depth and the breadth of things that one is required to have a grasp of in order to be able to add value to our profession, and you can see they're only going to grow exponentially. A big advantage of the world we live in today is you don't have to enter a ship to go and learn in the best institutions of the world. Everything is right at your fingertips, and just as Brenda is saying, it's entirely a question of your own initiative, and the only limit to how good you can get is as a result of how fast you can learn and how much you can learn. I'm encouraged by the way you are able to grasp very many multiple things that go into analysis of a bank. Understandably, it's not your everyday work as it is for some of us, but you also have a way to go. There's a lot for you to learn, and the resources are at your fingertips. I think everybody in this room has a smartphone and a connection to the internet. You can sit at the feet of the best investors in the world and learn from them. And that is the advantage that you carry with you and that you can grasp and take possession of for yourself. We look forward to seeing many of you as you get into the industry, and we'll always lend ourselves to assisting you to raise the bar for our society, our region, and indeed our profession. Thank you.
Before Brenda goes, so I'll speak as the president. Whoever is going to be going away having won this session, you're going to be representing not just the country, but we are also going to have you work hard and be able to represent the region. So we will not only be there to support, and you've gotten feedback, all of you, but we expect that this feedback and the feedback that you'll also get through communication that will be coming from the Secretariat can at least be put into work. We'll be available to add anything that you may need and to support you. But for now, I'll leave it to Brenda to announce the winner.
Thank you. Please allow me, before I do that, I just remembered of a resource that I should let you all know about. I work for the World Bank Group. Of the 5 institutions that make the World Bank Group, I work for IFC, and there is an open learning campus, OLC. You can type it on your laptop or phones. There are very many courses that you can do. Many of them are for free. And some of the, not even some, everything that we were talking about here is readily available on the Open Learning Campus. Kindly take the initiative and do those courses. Educate yourself. Thank you. I'll wait for the go-ahead from the President. So, for our winners of today, kindly don't let victory go to your head and forget to represent us as a country to the next stage. And don't just look at a region. We have the global, right? So just ask yourself what we are doing here. How do we compare with the people that are sitting in Asia? There is a reason I mentioned Asia. I think those guys are really aggressive. And in most of the DFIs, they are taking up positions all over the world. So ask yourself, how do you compare with that person? What I can tell you is that you're equal to the task or the challenge ahead. It just amounts to the amount of effort that you're willing to put in place. All of you have done a great job. But then at the end of the day, we have to have one person or one group to represent us. Without further ado, I would like to congratulate Team D from Strathmore University. Please come here. And for the rest of the teams, we really appreciate the efforts that you've put in this competition. If you need further maybe feedback about your performance and presentation, I'm sure you'll be able to get it from the Institute Secretariat here. Please come. Thank you.
Thank you. Joyce, do you need us? We can. Oh, okay. So I think we'll be giving, maybe we can just stand there, Chair D, Chair Lemley. You can give it. Sorry. You can give Brendan.
Can we also have the faculty advisor and industry mentor if they're present? Elias? You can receive the gifts on behalf of the university. Enda upige hizi picha. Tumia hizi. Quick, enda upige picha. Let's give them a round of applause. So team members, you can receive your gifts from the judges. Congratulations, Strathmore University. One final photo, please. with everyone for the bonus prize. Strathmore University students, this is your gift from the society. Congratulations.
I have some gifts here. You can stay here. I have some gift for the, one is for the industry mentor.
He's not here.
He's not here, so maybe you collect it on, is it a he, his behalf? Ah, what's the name? Maybe you can mention it.
So there'll be participation certificates awarded to every student who participated today. So come, your team leaders may come to this table to collect your certificates. But today we are grateful for everyone who showed up. We are grateful that you put in your effort, your time, and your work. It has displayed today. So thank you so much for making time. You can stay behind and take some photos, and then lunch is served on the second floor. So karibuni. You will be able to take a lunch voucher from the doors. So either of the doors, you'll be able to pick a lunch voucher from Karen or Priscilla.